The market has been sideways for about 6 days at 4,600, and today we're breaking above it pretty nicely. The bears are hoping the gap will close, and the bulls are hoping it's the start of a new leg up. And you'll notice on the screen, instead of the black title bars, I have light colored title bars. And that's because I replaced this computer screen a few weeks ago. The computer is new. It's only about 3 months old. And I had a ghost image on the screen from the black title bars. So when I close TradeStation down, I can see a ghost of the black title bars. And that's why I've switched to the light title bars, hoping that I don't end up with a ghost. Yesterday, we had a double top. We had a double bottom. FOMC, you always expect a move in both directions on the report. We went down a little, up a little, and then we rallied above the high of the prior day, and we had follow through. We did not have a good sell signal bar, and yet we sold off. We tried to get a bull flag, but no good buy signal bar. Here we had a buy signal bar, but we did not go above it. And then we collapsed to below yesterday's low. So we went from below yesterday's low, yesterday being the day before, to above its high and back below its low. So we had an outside up day, and then it became an outside down day. And then we tested the open of the week. Remember yesterday I said I thought the week would probably try to close below the open of the week. Now I think it's unlikely. We only have today and tomorrow left, and the open of the week is 50 points below where we are. And it's probably too far to get there. Also on the weekly chart, we're right near another key price. We have a huge outside down bar on the weekly chart here. And we have that magnet here, the March high. And now it looks like we're going to get up to around the all-time high. And I don't know if we get above it. Steve Grasso was on Fast Money yesterday, and he said something that I had not heard before. He said that whenever there's a bear market, not a bear trend, bear market means the market sold off 20% below the high, which it did, okay? And a bear trend is lower highs and lower lows. So this is a bear trend. We have lower highs and lower lows. And it's also a bear market. We fell more than 20% from the high. He said that every time there has been a bear market and a rally that retraces at least 76% of the sell-off, the market will go to a new high before it goes to a new low. So, I don't know how, I didn't do the test myself. I don't know if it's true, but this is a lot of momentum up on the weekly chart. And I do think we're going to get up to around the all-time high. I don't know how much above it we go. There are different ways to look at. I'm going to turn this down. We've got another minute and a half remaining in this bar. Normally on the open, I'm going to go back to something in a minute. Normally on the open, if you have a big gap up and you get a bull bar closing near its high and the body is a pretty good size, I will not buy. I'll want 2 consecutive bull bars, and then I'll buy above the second bull bar, or sometimes I'll buy the close of the second bull bar. And normally to sell, I like to see a pair of bear bars, except when there's a big gap up. If there's a big gap up, and then we get a bear bar closing near its low, and the body of the bear bar is a decent-sized body, I will sell below just a single bar. So for me to short, I need bar 1 to be a reasonably big bear body and close near the low. Then I'll sell below its low. Okay? And so far, that's not happening. Let me change the color of this. So it looks like the issue is going to be more, are we going to get a bull trend from the open? So is it a buy? Is this cheap? You can say, well, Al, it's way overbought in the daily chart. Well, overbought in the daily chart can still be cheap. Right now, I'm paying attention to the close of this bar. All right. So it's not a bar that I want to sell below. It's not a big bear bar closing near its low after a big gap up. So there are probably buyers below 1, so I'm not going to sell below 1. And it's also not bullish enough to be paying far above the average price. One measure of the average price is the 20-bar exponential moving average, and we're far above it. And if I'm going to be paying a price that's far above average, I want bars that are far above average. And this is not far above average. So I'm not going to sell below, and I'm not going to buy above. So I've got to wait for more information. More information means more bars. Daily chart, I wanted to show something here. Okay, I'll do it weekly chart. Well, I get too much stuff in this chart. Let me use a different chart. I'll go over here, and I'll turn it into a weekly chart. And we had bottom, an expanding triangle. Actually, we had consecutive expanding triangles. You know, we had one here, and then a bigger one here. I talked about that at the time that it was likely to result in a rally, not necessarily a new high. But whenever you have consecutive complex patterns like consecutive wedges or consecutive expanding triangles or consecutive double bottoms, consecutive anything, there's a higher probability that you're going to get a reversal. And we got the reversal. We broke above the bear channel, and we had a higher low, but 4 bear bars, so a minor reversal. And then here we have a double bottom. This low is above that low, good, and it's a decent bull bar. And here we got a bull bar closing near its high. So this, buying in here is reasonable for a swing up. And if you're looking for a swing up, you're looking for measured moves. And we have a double bottom and a neckline. So one of the first things you'll look for is a measured move based upon the double bottom here. And we're almost to that target, so we should get there. And on the daily chart, I'm going to turn this into a daily chart because I want to show something else. On the daily chart, this is a breakout. We have a gap, and it closes above the trading range. Trading range for the past past 15 months or something, 6 months, a lot of bars. And if you have a breakout, you got to be thinking about a measured move on. So we have the double bottom, measured move up there. But now we have a breakout. And what did we break out of? We broke out of this. The bear's going at a double top. We have a breakout. This is a little wedge. We broke out above this wedge. We're more than a measured move up based upon the height of the wedge. And now you're going to be thinking about a measured move up based upon the height of the double bottom. Or if we get above it, which I think we will, because I think we'll get up here at a minimum, then you're going to be thinking, well, maybe it's a measured move from this low to there. And if I do that, if the measured move is from the October low to here, where does that take us? It takes us up here. I'll turn this into a weekly chart, which is right around the all-time high. So we have a magnet here, a very sharp sell-off, and a magnet here. So it looks like we're going up to the area of the all-time high. And right above the all-time high is the 5,000 big round number. I've talked about that many times over the past several years. I wondered if this was going to reach it. It turned down before it. But this is extremely strong. It's similar to this. And when the trend is very strong, it's going to get follow through. So we may get a pullback for a week or 2 or 3, but I think we're going higher. And the most important target or targets are the prior high, the 5,000 big round number, and then a measured move from where it broke out, which is right here. So there are several reasons to get there. We might do this for a month or 2 before we get there, but it looks like we're going higher. Turn this back to a 5-minute chart. Oh, I wanted to say, let me put this back to a monthly chart. A lot of stocks are obviously strong. mostly the big tech stocks. There's Apple, a credible top, but instead of coming all the way down here, we have a spike pullback channel. Typically, the market tries to get down to the start of the channel and then enters the trading range. Instead, the sell-off became a bull flag, and we broke strongly above it. Meta is one that I want to talk about because it's been the single most impressive, Meta and NVIDIA, it's been the single most impressive stock. The point I wanted to make is this body is bigger than this body. This body is bigger than that body. This body is bigger than this body. So the bodies were shrinking, and prior to today, this body was smaller than this. So we were losing momentum, and now we are accelerating up. What are the chances that this goes up and then down? 10%, right? So if this goes up, and it might go down for a few bars, this is probably not going to be the end of the move. When you get a move like this, everybody wants to buy. And the people who are not long, some are buying at the market, which is okay if they trade small and use a wide stop. Nobody wants to put a stop down here. You don't want to risk 70%. But anybody buying up here has to use some kind of a wide stop, 20, 30% down. And they're confident that even if we sell off, we'll come back and test this high. And, that's probably 70% bet. So a Meta, here's the daily chart, extremely strong bull trend. And at some point, we're going to enter a trading range. It's possible if we fail here, if today closes near its low, then traders will start wondering if we've begun a trading range. But even if we go sideways or down for a couple months, I think we'll come back here, probably go above it. One other point I wanted to make about, I'll put up the E-mini. I said at the end of June, the market tends to rally into the early part, sometimes the middle of July. Instead, we've rallied all month. And the weakest time of the year is August, September, October. We're very overbought going into August, September, October. So I think we're going to pull back into a trading range at some point in the next few months, or pull back, 200 points, 300 points, I don't know, but I think we'll pull back. Is there anything to short now? No. I had been shorting 4,600. I'm not short now. I probably will short if today ends up as a pretty good bear bar. Right now, there's no evidence of that. We have a spike pullback channel, so we may come back down here in the next 3 months, the weakest time of the year. One other point, today is July 27th, and Monday is the final day of the month. So we have 3 trading days left, today, tomorrow, and Monday. And at the moment, July is a very big bull bar closing near its high. If it looks like this at the close of Monday, when July closes, that's very bullish. It increases the chances we'll go higher. If it has a fairly prominent tail on top, maybe we'll go sideways to down for 1 or 2 bars, but I still think we're going to go higher. But I'm paying attention to the appearance of the monthly bar because we're right at the end of the month. It increases the chances the market will try to do something important on the monthly chart. Can we get down to this breakout point? Probably not, too far below. Can we get up to this lower high? It's within reach. It's possible we could get there in the next few days. I don't think we will, but it's possible. Back to the 5-minute chart. We have consecutive bull bars, but they're not big bull bodies closing on their highs. If I'm going to be buying after a big gap up, I want bars that are much stronger than average. At a minimum, I want 2 bull bars. We have 2 bull bars. I want one of the bull bars to be a big bull bar closing near its high. I want a bar that looks like this, or a bar that looks like this. We do not have bars that look like that. And because we do not have bars that look like that, I don't want to pay a price that's far above average. Here we got consecutive inside bars and II, possible final flag. Here yesterday we had this little sell-off in an II. I mentioned that it could be a possible final flag that we break up low and reverse up. Same here. Obviously, we may go up for a measured move based upon the expanding triangle. That's an obvious magnet up here around 46.5. But whenever you have a big gap up and you have neutral bars, the market most often enters a trading range. And by a trading range, I don't mean 5 bars. I mean like 15, 20 bars. So we're probably going to be mostly sideways for the next hour or two. And when you have a trading range open after a gap up, one of 4 things happens 80% of the time. Okay. So here we got 4 big gaps up, and either the market goes sideways and forms a double bottom, and then if you get a decent bull bar, you look for a rally, or you get some kind of a wedge near the moving average. Here it did not quite reach. Here it went a little bit below. So you look for it to go sideways to the moving average and form either a double bottom or a wedge bottom, and then look for a rally. Or you look for a double top or a wedge top. Here we had a wedge, and it became a bigger wedge, and a reversal down. And the longer you wait to find the direction, here you waited a couple hours, the less likely you're going to get a big trend. So big gaps up or down that have trading range opens, especially trading range opens that last a lot of bars, usually are not going to be the biggest types of bull trend days. Sometimes you can get a big gap up and a bull trend from the open that just keeps going up and up and up, or a big gap up and then a bear trend from the open that just goes straight down. But when you get these early trading range bars, it increases the chances that you're going to be sideways for a couple of hours, and it also increases the chances that you're not going to have a big bull trend or a big bear trend. Okay, the bulls are hoping for this. They want a big gap up and a trend that begins early on. And the bears are hoping for, I'll show you in a minute, but if you do get a bull trend from the open, 20% of the time it'll last all day. 20% of the time you'll get a reversal, and 60% of the time a strong trend in the open will end up converting into a trading range. What the bulls are hoping for is this: a bull trend from the open. Big bull bar, consecutive bull bars, both closing near their highs, this one closing on its high. That's a buy, and you're taking a chance that you're going to get a small pullback bull trend that lasts all day. Today does not look like that. So we're probably not going to do that. For the bears, they want the opposite. They want a bull trend from the open. Here's the open right here. And they want it to sell off all day. And even if it does, only 20% chance it'll last all day. 20% chance you'll get a midday reversal. And if it does sell off strongly, 60% chance it will convert into a trading range. Bears are hoping that we don't spend a lot of time going sideways in the market. They want the market to start forming bear bars closing near their lows. They want a bear trend from the open. Here, a little buy climax, a little bull trap, and then sell on. Here, a bear bar, a new high, and then a second reversal down. Gap up, a pair of good bear bars. Mostly sideways, but it was a small pullback bear trend. Gap up, not a big gap up, but a gap up, and then big bear bars. Gap up sideways for a few bars, and then consecutive bear bars, one being big, closing near its low. It's a sell below. Stop is far above, so you can trade small. Here, you get a second entry, and we sold off for most of the day. Another trading range bar, We're always in long at the moment, but I think it's better to be flat. The bears have a bear bar with a decent body and a close below the low of the prior bar, but the body is not especially big and it has a big tail below. So can you sell? Taking a chance this is the start of a bear trend. It's not bearish enough. I would wait. Globex high, Globex low. Very big Globex range. It's still 80% chance we're going to break, 80, maybe even 90% chance. The bigger the range, the better, the higher the chance that we do not break out of the range. But right now, probably 90% chance we're going to break out of the range. And breaking out of the top is more likely than the bottom, simply because we rallied in a small pullback bull trend and we're near the top. So we're probably going above the Globex high at some point. A bigger bull bar, the biggest bull bar, in fact, in the entire overnight session, attracts profit takers, and that's what's going on now. The bulls look at that and say, wow, at some point I had to take profits, and here's a really big bull bar. This is a good opportunity to take some profits at a really good price. So when the bulls see that, they sell. However, chances are it's not going to be the final high. Whenever you have a really strong bull trend, unless you get a pretty quick, immediate reversal, it's probably not the final high. Now, we're reversing down below consecutive inside bars, but 3 bars with big tails, not many traders are going to sell the first reversal down. And the bulls are trying to get a buy signal bar, bar 5, or a failed breakout below an II. So they're hoping that this is a double bottom here, double bottom here, a failed breakout below an II. It's a high 1. We have a big bull trend here, the gap up, and it's a pullback. But I'm still not willing to buy this far above the average price when the bars look pretty average. I was starting to talk 10 minutes ago, 15 minutes ago, about how this rally on the daily chart is extremely strong. And, bigger acceleration up, acceleration up, acceleration up. You can argue it's climactic, but it's and overbought. That's true, but it still could be cheap. The only reason why a market goes up is because it's cheap, right? Traders feel like if they buy, they'll make money because they expect the market to go higher. So a market can be overbought and cheap, and a market can be oversold and expensive. So here we sold off strongly, so we're oversold, but it's still expensive. How do I know? Because it fell a lot further. So using terms like cheap and expensive during strong breakouts, I think it's misleading. You can say overbought or oversold, but I would not say cheap or expensive, because is the market cheap here? Well, it became a lot cheaper, so it was not cheap. Traders thought it was still expensive because they were still selling. Is the market cheap here? Well, relative to this, it's cheap, but the market still thinks it's too expensive. How do I know? Because it kept selling off. Same as right here. Is the market overbought here? Sure, right? But is it expensive? No. Traders thought it was cheap. They bought expecting it to go higher. They thought the price was too low. So cheap and expensive are really not terms that traders use. Or chart traders. If you're an institutional trader trading based on fundamentals, then you can look at the fundamentals and say, the PE ratio is 6, and all the other companies in the sector, the PE is 15. Then it's cheap. So if you're talking fundamentals, you can use cheap and expensive. Even then, I usually don't, I don't use those terms. Let me say one other thing. This is ARC, Kathy Woods' stock, or ETF, or innovation ETF. If I see a market that sells off 70, 80, or 90% like this, and it starts to go sideways, I'm looking to buy. I'm looking, Sometimes you'll break to the downside, but if you start to get a lot of bull bars, it's a buy. Chances are the market's going to go up at least 50%, which it has already done, and usually it'll go up about 100%. And there are a whole bunch of stocks that look like this. Coinbase, another one, it sold off from 400 down to 50, and then it stopped going down. And then you started to get a lot of bull bars, head and shoulders bottom, higher low, major trend reversal. You can call this a wedge bull flag from this early bull trend. So there are a lot of stocks that look like that. And there are a lot of stocks currently that are still in this phase. They haven't had the bull breakout yet. Snap, okay? Snap is another example. It was 80 and it fell to 10. It's been spending a lot of time at 10. I wanted to buy it at 5, but I never got a chance. I never got down to 5. And I still want to buy it, but that big gap down this week, it went one tick below 10. This is a good example of how the market pays attention to big round numbers. And the market has been paying a lot of attention to 10, for a long time. This line is 10. You can see we've been oscillating around it, dipping, broke far below it, back above it, went far below it, back above it, then support, back, big gap down, reverse back above it, tested it above it, big gap down a couple of days ago, yesterday, and this low is 1 penny below 10. So a lot of traders have limit orders to buy at 10. Anyway, that's one that's on my radar, but I really want to buy it lower. I don't want to buy it at 10. And I don't know if I'll be able to buy it at 5. I don't know if it'll ever get to 5. So it's possible I'll never buy it. Back to the E-mini. Different ways to look at a wedge. 1, 2, 3. 1, 2, 3. 1, 2, 3. But nothing to sell yet. This is where I think we're headed at some point in the next 3 months. So spike, pullback channel. Also, we were sideways around 4,000 for a long time, over a year, 15 months or so. And it has kind of a triangle look. So I think we'll get down to 4,000 again at some point in the next year. Not in the next few months. This is just up too strongly. So I doubt we'll get there in the next few months. But we may get here in the next few months. This is where I think we'll be in the next few months. And there's the all-time high. And I think we're going to go up in this area at some point probably this year. The bears would love to get a bar that looks like that. Here, it was unlikely to go down all that far because this was so strong. But here, we're starting to get a nested wedge. And if we get a bar like that, there would be a higher probability that we could get down here. It's still a high one. We have a gap up, so a bull trend, and a pullback. And every high is at or below the high of the prior bar. So every bar is a high one buy signal bar. And this is a high one buy signal bar. But you really want to buy. It's 4 bear bars, not good if you're looking to buy. And we're still far above the moving average. So here we are far above the moving average, and 4 of the first 6 bars are bear bars. Is that above average bullishness? If most of the bars are bear bars, is that bullish? No. So I don't want to buy. I don't want to buy the high one, even though it's a high one in a bull trend. The bodies are small. The tails are big. Trading range behavior. So it increases the chances that we're going to get to the moving average. The moving average, this one, it's a 20-bar exponential moving average. So it's based on 20 bars. 7 of the bars are here. 13 of the bars are here. Every new bar we get here replaces a bar here. So you replace a low bar with a high bar. So even by going sideways, the moving average goes up pretty quickly because you're getting rid of the cheap parts of the moving average, and you are adding prices that are above the average. So the average goes up quickly. And most of the time, the moving average will be above the low of the day by bar 15, because by bar 15, 15 of the 20 bars are up here. So the moving average is usually up in that cluster of bars. I said the moving average below the low of the trading range, not necessarily below the low of a bar. You know, sometimes it'll go sideways for 25 bars, and the moving average will be above the low of the trading range, but it still might not reach the low of any bar. I don't pay much attention to the 30-minute chart. I pay no attention to the 30-minute chart. But we just hit 7 o'clock, and the first 30-minute bar is a doji bar, a neutral bar. And the first 60-minute bar, we don't know yet. It's only halfway done. It could be a bear bar, it could be a bull bar. Might go up for a measured move based upon this trading range. There's the bottom of the range. There's the top of the range. And measured move would be up there, another 30 points above where we are. Can you buy at the market betting that a bull trend is more likely than a bear trend? Well, you know, whenever there's a big gap up, there's an increased chance of a trend day. And however, the bigger the gap, whenever you have a really big gap, if you get a trend day, it's usually not the biggest type of trend day. As I said, traders do not like to pay far above the average price. And if you open far above the average price, a lot of traders will wait until the market gets to the average price, either by going sideways or down. And if that takes 20 or 30 bars, then you only have 50 bars left. You're probably not going to get a huge bull trend day. So big gap up reduces the chances of a really big trend day, but it increases the chances of a trend day, but not a big trend day. And when you have a gap up, if there's going to be a trend day, it's more likely to be up than down. So we have a big gap up, so there's an increased chance that we'll get a bull trend, but it's a big gap up, and so far trading range open. If we do have a bull trend, it's probably not going to be a big bull trend. Bears look at yesterday and say, we went down, we went up, we went more down, we went more up, we went down again, we went up and down, right? So the bears are hoping that this is just another expansion of the triangle. So you can draw the triangle different ways. And it's still an expanding triangle. You can use that low, you can use this low. So 1, 2, 3, 4, and the bears are hoping 5. But we're not getting good sell signal bars. We reverse down below 3, we reverse down again below 5, but both are doji bars. So not a lot of people willing to sell. Five consecutive bear bars. That's good for the bears. Bulls are hoping this is a wedge bull flag, but yesterday they hoped this was a wedge bull flag, and then we did that. Bulls want a double bottom, 1, 7, but nobody's going to buy it because we're too far above the moving average. The bulls want a double bottom, but they want a double bottom near the moving average, like that, or at the moving average. And they also want bull bars on the reversal up. And we don't have that yet. And the bears are hoping that we collapse like 68 yesterday. They're hoping that this will be a bear trend from the open, which at the moment it is. So far, bar 1 is the high of the day, and every bar has a high at or below the high of the prior bar. So we have an 8-bar bear microchannel, but it's not all that bearish. This is what the bears need, a big bear bar closing on its low. If they get it, this could be a trend day. Remember I said I do not think we'll get down to the open of the week by tomorrow's close. If we start to get big bear bars, it'll become increasingly likely that we will get to the open of the week, and the weekly chart, instead of having a big bull bar, it could end up having a bear body. Unlikely right now, but if today's a big bear trend day, we could get a bear bar on the weekly chart. And it would be a lower high double top with this. This is a minor lower high, so I don't think a lot of traders will look at that as a double top. This is a major lower high. We reversed down and went down far. I think of this as part of the reversal that began back here in March. Bears want a breakout. They want a big bear bar closing near its low, a big bear bar closing near its low and closing below the low of the day. They want consecutive big bear bars closing near their lows. More and more bulls are giving up here. And if 8 is a pretty big bear bar closing near its low, you'll get a lot of bulls giving up. Facebook, big gap up, but still holding up. Royal Caribbean, yeah. A couple pretty good bear bars with that gap up. NVIDIA, rallying. Microsoft had that big gap up, big gap down yesterday. Nope, not good. Google had that big move up the other day and follow through today. So no clear pattern. Can you short the close of this bar or below the low of this bar? We would have, let's say 8 closes on its low. Then we'll have consecutive bear bars, 7 and 8, with decent bodies, and one of them closing on its low. So you will start to get bears selling at the market or at the close of 8 or one tick below 8, betting that we're going to get down to yesterday's high or near yesterday's high and the moving average. Can you buy the close betting it's a bear trap? Nope. Too many consecutive bear bars. The bigger the tail on the bottom of 8, the fewer bears are going to short. And that's a big enough tail to make a lot of bears wait. I said over here we were always in long. Are we always in short right now? We might be. Can you buy above 9? I would not. Suppose 9 is a big bull bar closing near its high. I'm still not going to buy it. We're still fairly far above the average price, and we have a whole bunch of bear bars. That's not above average price action. So I'm currently flat. But if I had to be long or short right now, I'd be short. I don't think there's a great need to do anything yet. We're still probably in a trading range open. Here we had a bunch of bear bars. Bears are hoping that we've begun a bear trend from the open. Even if it's not strongly bearish, if it's a small pullback bear trend, it can last all day. They're hoping we start to accelerate down. Bigger bear bars, consecutive bear bars, big bear bars closing near their lows. Same here. So far, not getting that. Still probably a trading range open. Bulls hoping that this reverses up from around the moving average. So maybe a wedge, so one rally, and then a second rally, and then a third rally. And bears are hoping this is the start of a bear trend that will last all day. More and more bulls giving up, more and more bears starting to short, at least small positions. Globex chart, we're not even to the middle of the Globex range. So what's the chance we break below the Globex low? At this minute, maybe 20%. But if we go lower, it becomes 30%, 50%, 60, 70% down here. But we haven't gone down there yet. We're at a price where the Globex market went sideways. What about today's GDP report? The GDP today was, I think, 2.4. How can we get a recession if the GDP is 2.4? Well, I talked about this the last GDP report. The Fed, the economists who determine whether or not we're in a recession, they're not going to say we're in a recession unless we have a sustained contraction of the economy. And sustained is not 3 months, it's 6 months. So that means we need at least 6 months before we can enter a recession. Because if next quarter's GDP is down, it's only 1 quarter, it's only 3 months. That's not a long enough duration for them to declare a recession. So if we're going to have a recession, the earliest it can be is 6 months from now, which is early next year. And as I said yesterday, we raised rates yesterday, and the average recession begins 13 months after the final rate cut. So if yesterday turns out to be the final rate cut, the average recession would begin 13 months later, which would be next summer. Is this a wedge? Well, you can call it a wedge here, a breakout below it. Maybe it's a bigger wedge on a smaller time frame. But it's too many bear bars. That's a problem. It's selling pressure. Can you sell at the market, sell the 9 high, and put a stop above 1? You can. I'm not sure that it's worth it. Can you buy? No. So you're either short or flat. We're getting near the end of the first hour, and the bears would like the hour to close on its low. They'll bet the breakout above the trading range fails and that this becomes a final bull flag. But they'll want the hour to close on its low. They'll want it to be as bearish as possible to sell. If it has a fairly conspicuous tail below, most bears are not going to short below the low of the bar. Do I still think trading range open? Yes. Well, we have 7 bear bars. Only a couple. We don't have really big bear bars. We have 1 decent bear bar, 2 moderate bear bars. But all the bars have tails. Even the bigger bear bar, 8, has a fairly conspicuous tail. 9, it's a high 1 pullback from the gap up, but it's 7 consecutive bear bars. So more traders will place limit orders to sell at the 9 high than stop orders to buy. What happens if we get 2 big bull bars, 10, 11? I would not buy. It's probably a minor reversal. If we go up, it's probably going to be minor. We're probably going above the 1 low. And why did I say that? The same yesterday. When I finished up talking over here, I said I thought we would dip below the 22 high because we're in a trading range. And in trading ranges, the market usually pulls back beyond breakout points. We broke above this, so we were likely to pull back below it. And here we broke below this, but the bars look like bars in a trading range, and therefore we're probably going to go back above the 1 low. I don't know if we'll do it here or a few bars from now, but we're probably going back above the 1 low. What happens if we do not go back above the 1 low? Then we have a gap. Like right now, there's a gap, 1 low and 10 high. If you get 2 gaps in the first 2 hours, you have an increased chance of a small pullback bear trend lasting all day. But right now, these bars look like trading range bars, so we're probably in a trading range. And if we're in a trading range, gaps should close, so we should go above the one low. This is important. If the gap stays open, and if we get two gaps in the first 2 hours, then you got to be thinking that we're probably going to get a small pullback bear trend that's going to last most of the day. If we get consecutive bull bars with at least one being big, closing on its high, and closing well above one, it might be back to always in a long, but I still think we're in a trading range open. Probably more sellers than buyers above 9. For the bears, we have 8 consecutive bear bars, I think, and 10 is a low one, but it's a bull bar, and the bear trend is weak. So I think it's not a very good short below 10. Bulls are hoping that we're going to get a wedge bottom. And when you have gaps up with wedge bottoms, you can call it a wedge bull flag. The wedges often look crummy. So here's the moving average and a gap up, and we sold off. If you have 3 lows, here we have 4 lows. It's a wedge. You can wait for a big bull bar closing near its high. But even with all those bear bars, it's still simply a test of the moving average. Did not quite get there. Sometimes the wedge is bigger. So we have a gap up and then 3 lows, starting with this low from yesterday, a bull bar closing near its high. Here we rallied and sold off. So that's a bull bar, then a bear bar, a bull bar, bear bar. You know, it's a wedge. On a smaller time frame chart, that's a wedge. Traders will look to buy. I like to buy above bull bars closing near their highs, so we buy here. And when you have these bad-looking wedges, you know, the trends that you get are usually not going to be all that strong. Here, 3 legs down, 1, 2, and 3, and then a bull bar. Traders will start buying, hoping to get that. Doesn't look like a wedge. It's a truncated wedge. We have 1 strong leg down, 2 strong legs down, 3, but the bulls were so eager to buy, they did not wait for it to get below the low of the second leg down. They bought the close of that. And so instead of this going just a little bit below that low and reversing up, it's reversing up from above that low. It's a double bottom, but I also think of it as a truncated wedge, that we have 3 good legs down, 1, 2, and 3, but the bulls were so eager to buy, they bought above the bottom of the second low, and they formed a higher low. Another bad-looking wedge. We had a trend for a couple hours, but not a trend day. A lot of tails on a smaller time frame chart. It's a wedge at the moving average. A lot of trading range trading. The day ended up with a lot of trading range trading. You can see they sold above 9, but so far they have not made money. And they bought below 10, a bad low one. What happens? You buy above 11, a micro double bottom, a truncated wedge, 3 bottoms, 1, 2, and 3. The bulls were so eager to buy on 3 that 3 could not fall below 2. I don't think it's a very good buy. At the moment, it's a small pullback bear trend, but not very bearish. Still probably a trading range open. We're getting near the end of the first hour, and traders are thinking about this. Will it be a big bear bar closing near its low, increasing their chances we go lower? Or will it be a bear bar with a conspicuous tail, reducing the chances that will go much lower? We have a micro double bottom, down on 9, up on 9, down on 11, up on 11. The neckline is the highest price in between, which is the 10 high. So if somebody's short, it's reasonable to exit above 10 a reversal up from a micro double bottom. Also, a bull bar closing above its midpoint. That's another reason to exit shorts above 10. You can always sell again if 12 or 13 is a bear bar closing near its low. And for the bulls, is it a buy? I think it's just too many bear bars. I would wait for either a better looking bottom or for a strong reversal up for a couple bars and then buy higher. One bar left in the hour. I still think we're going above the one low, but I will change my mind if we start to get bear bars. Then you're going to be thinking about a possible small pullback bear trend. Small pullback bear trend, I don't have it drawn in, but we have either a gap or here and maybe a little body gap there. Pretty quiet. This is a gap down in a small pullback bear trend. Gaps and body gaps. Here's an actual gap. We broke below these lows. I'll change it to here. When you get gaps and body gaps, especially gaps, it means limit order bulls are not making money. If they buy at the low here, it has to go back above that. It has to go far enough down for them to scale in and then back above that low, which it did not. So if it's hard for bulls to make money, there's another example of a gap. So if a bull bought that low, bought more lower, it had to go above this low for him to make money on this lower buy. It did not. It got to the midpoint of his two buys and he could exit without a loss, but he could not make money. Getting drawn down to the magnets, we have a cluster of magnets here. This is the high from a couple of days ago. I don't need that anymore. Can you sell the market here? A bigger bar, accelerating down. I think it's not ideal. We're right near a cluster of support. Yesterday's high, last week's high, the moving average. So am I going to sell here? No, I'll wait to see if we get a pair of big bear bars, 12, 13. The 60-minute bar looks like it's going to close near its low after a big gap up. That increases the chances that we will go below the low of the bar. The bears are hoping this is the final bull flag, and this is the start of a reversal down to the bottom of that flag. Remember, 4,600 was an important price for 6 days. Now we're far above it, and it looks like we're getting drawn back to it. If you do sell here, where's your stop? If you sell here, I'm not going to, but if you do, you have to trade small. And you could put a stop one tick above 10 or one tick above the low of 1. Or you can put a stop above the high of the day. This is the 60-minute bar behavior, right? It's affecting the appearance of that 60-minute bar. Will bulls buy at the moving average? I would not. That's the end of the hour. We should go below bar 12, not necessarily during bar 13, but look at the 60-minute chart. Big bear bar closing near its low, and context is good for the bears. We have a bull trend, a trading range late in a bull trend, a good candidate for the final bull flag and the end of the bull trend. We have a good sell signal bar, so we probably have to go below the low of that bar to see what's there. Is this the start of a bear trend, or is it simply a pullback from this breakout above the trading range? Bulls are still hoping this is a wedge, 3 reversals up, 1, 2, and they hope to get a third reversal up here. And the bears are hoping that we get a measured move down. We have a breakout. We broke out below that, so maybe it's a measuring gap. Do I still think we'll get above the 1 low? Maybe 50-50 chance. The more we go down, the more likely this will be continued as a bear trend. We should go below 12 and trigger the sell signal on the 60-minute chart, and then over the next few bars, decide whether the 60-minute sell signal is going to be profitable. Globex chart, remember up here, I said maybe only 20% chance we would get below the Globex low. Now we're in the middle third of the Globex range. I still think there may only be a 30% chance we're going to go below the Globex low. And I talk about this occasionally. When you have a small Globex range, the chance of breaking out of the Globex range is more than 90%. Small Globex range broke above, small Globex range broke below. But when you have a really big Globex range, here's an example of a really big Globex range. It may only be 80% chance that you'll break out. Here we broke a little bit above the top of the Globex range, the red line. And today, we opened near the top of the Globex range, but did not break above it. And now we've sold off pretty far below it, 20 points below it. So it's becoming, the odds of the market not breaking out of the Globex range are going up. So, maybe 50% chance we're not going above the Globex high, and we're not going below the Globex low. Very big Globex range, and now we're in the middle of it. Bulls try and get a wedge. 3 reversals up, 1, 9, and 13. So you got a lot of bulls buying the close of that 60-minute bar. Why would the bulls buy the close of a big bear bar? Well, think about it. We're in a bull trend. The bulls want the bull trend to continue. And what happens if we go 1 tick below that bear bar? It's a sell signal. It's a very good looking bear bar, and it's a good candidate for a final flag reversal. So a lot of bulls will exit, and a lot of bears will start to sell. If you're long, do you want that to happen? No. So what are you going to do? You're going to buy, trying to prevent that sell signal from triggering. So this is bulls trying to prevent the market from falling below 12. That's the opposite of what we had a couple of days ago over here. Bull trend and a high 1, but the bulls could not make the high 1 trigger. They could not get above the 63 high. Another good bull bar. The bulls could not get it to trigger. Why is that? The bears sold the 65 close. They sold the 63 close. They were hoping the reversal would be successful, and they don't want to give the bulls a good reason to buy. So when the bears see a good buy signal bar, and we're in what they hope is a bear trend, they're going to short. They're going to sell the market, and they're going to place limit orders to sell just below that high. They don't want the market to trigger those buys. And that's the opposite of what's taking place on the 60-minute chart right now. A sell signal that the bulls do not want to trigger. I still think we're probably going to trigger the sell. So I think we're going to go below the 12 low at some point today. So possible low of the day. Remember I said that when you have a big gap up, the bulls will try to get a double bottom or a wedge bottom near the moving average. Well, we have a wedge bottom, and we're near the moving average. So possible low of the day. Is it likely the low of the day? No, but is it okay to buy above 13 and take a chance? You could. I think it's a very tight bear channel. I think it's probably better to wait to see if we get 2 or 3 bull bars. The first reversal up from a tight bear channel is probably minor. Bears are selling, trying to prevent the buy signal from triggering. The bulls are buying, trying to prevent the sell signal on the 60-minute chart from triggering. So the bears do not want 14 to go above 13, and the bulls do not want any bar to go below 12, below the last hour. Is it still a trading range open? It could be, but we have a lot of selling. Bears are hoping it's a bear trend. We did not get above the 1 low, but we have the same thing here. 12 is a big bar, broke below 9. Some bulls bought the 9 low and they bought more 5 points lower. Can they make money? Yes. Okay, you can say, well, wait a minute. You got a bear trend and bulls are making money. Something's wrong. That's right, something's wrong. It's not as bearish as it appears. If bulls can make money in a bear trend, the bear trend is not all that strong, even though it might look strong. Bears, it's a low one below 14, but now we're on a wedge buy. So to short below 14, the bears will need a reasonably strong bear bar. If you were short, can you still be short? I think if you're a day trader, it's better to be out of shorts. We went above a bull bar closing there. It's high. We have a pullback to the moving average, and we have a wedge bottom. It's probably a minor reversal, but I think it's better to get out just in case this becomes the low of the day. You can always sell again if 14 is a bear bar closing near its low, or 15 or 16. Can you sell on a stop below 12? I would not, because traders bought the 9 low. They'll probably buy the 12 low and more lower. So I would not go short below 12, even though it's a sell signal on the 60-minute chart. Possible low of the day. But if it is, this is still probably going to be minor, and we'll still probably have to test the moving average again in the next 5 or 10 bars. If you're long, I would be trading small, stop below 12. If you're flat, I would wait to see what we get over the next few bars and then look to get long if we get fairly sustained buying. There are still some bulls who bought the 1 low that filled here, bought more 5 points lower, 10 points lower, betting that we'll get back to that 1 low. They can get out break even on their first buy and with a profit on their second and third buy. Consecutive bull bars closing near their highs. So good for the bulls, but still probably a minor reversal because the bear channel lasted a lot of bars. Minor reversal means unlikely to go straight up in a bull trend. That we'll probably have to test back down before we can get a sustained bull trend. The bears, a lower high double top 10, but a bad sell, probably buyers below 14. I would not sell below 14. Did it buy the close yet? Well, the bars are not all that big, and we had a lot of bars going down. So if you do buy, I did not yet buy, but if you do buy, I would trade small. And for the bears, they're hoping to get a double top with 10, and they need a good sell signal bar 15. And they have a little doji bar. That's not very good. Probably buyers below 15. I left that red line because it still could be a trading range open. And the limit order bulls bought on 7 at the 1 low. It looks like they're probably going to make money. We may stall at the 10 high. We sold off there a few bars ago, so we may sell up again there. Wedge bottom at the moving average. Pretty good bear bars, yet we got a rally to a new high. Small wedge. a lot of big bear bars, yet we got a rally to a new high. If we get a rally to a new high, we'll be above the Globex high. Right now, this reversal up is not nearly as strong as this. These bull bars are as big as the big bear bars, and they're closing near their highs. And I got 2, 3, 4, 5 of them. And so far, we have 2 bull bars and then a small doji. So this reversal up is not as strong as this. It's probably a minor reversal, which means it will be a bear flag, like a double top with 10, or we'll enter a trading range, maybe test down around the 12 low. Bulls are trying to get a very big bull bar closing on its high. They're trying to break strongly above 10 and above the 1 low. But the bars are not all that big, and the bear channel is tight. Both of those things make it likely that we're going to form a trading range here and go down and test somewhere down in here again. Test the moving average, maybe test the 12 low. What do the bulls do? Well, let's see how the bar closes. Now, again, a perfect doji. So not a very good sell, not a very good buy. We're still on the buy above 13, stop below 12. And for the bears, we're still in a bear trend, and we have a double top here. The reversal up for the bulls right now, not very good. And the sell, the bear flag for the bears, not very good. So we may have to go sideways here and get more information. Not good enough to short, and not great for the bulls who are long. Can you buy the 12 low and buy more lower? The bulls who bought the 9 low and bought more lower made money. The difference here is if we go below 12, we're triggering a 60-minute sell signal. So while I think there probably will be buyers not far below 12, I would not take that buy. Can you sell below 17? I would not. If you're going to be selling low, it's better to sell below 12. And it still looks more like a trading range here. So not a very good sell below 16, 17, or 12, and not a very good buy above 13, low 16. If the bulls get a second reversal up here, if 18 is a bull bar closing near its high, maybe closing near the 17 high, that would be another buy opportunity for the bulls. The bulls are hoping 17 is a pullback from a reversal up from a wedge bottom. It's a second test of the moving average. But they want another bar that looks like 13. And if 18 does not look particularly strong, they're not going to buy. And for the bears, they have a problem. We're in a support zone, all these lines, and we have a weak sell signal bar. So I think it's hard to be short. You could still be long above 13, stop below 12, but I would have gotten out below 16. So I think the best choice is flat. And wait to see if we break strongly below 12, or wait to see if we get a good buy signal bar, 18. The bulls want the wedge bottom, but they really need bars that look like this, and they don't have them. Or they need a lot of bull bars, and they don't have that. That's one of the things that's useful with this encyclopedia. You can look back, and you can see we have a possible wedge bottom, and then you look at what happens. We just triggered the 60-minute sell. Will 18 close near its low and close far below 12, increasing the chances that we'll get a measured move down based on the height of the wedge that would get us down to yesterday's close? Or will 18 close above the 12 low? That will increase the chances that we'll go more sideways. You can see that it plunged pretty quickly, So there were a lot of sell orders. The bulls who bought above 13 sold out of longs, and then the bears who were trading the 60-minute chart sold into shorts. So there was a pickup there. You can't see it here. Maybe I'll put up a 15-second chart. Maybe we'll be able to see a volume pickup. Yeah, you can see the volume picked up there on that breakout. Bulls are hoping this will be a failed breakout below the wedge and another reversal up, forming a bigger wedge. And bears are hoping that it's a measuring gap. It closed below 12, good for the bears, but a fairly big tail, bad for the bears. A wedge bottom, we broke out below, and then the breakout failed. We got a good buy signal bar. A wedge bottom, and we broke below it, and it failed. It became the low of the day. This close was above the breakout point. Today, we don't have that. We haven't attempted a wedge bottom. It became a bigger wedge bottom. It attempted a wedge bottom. We broke below it, and then we reversed up. Even though we rallied for a couple hours, we did not go up all that far. Richard, I don't know if you're listening, but slide 617 in PowerPoint 8 is in the wrong place. I'm going to delete it. The bulls need a bull bar closing near its high for a possible low of the day. There could be a sell vacuum test of yesterday's high. The bulls are trying to keep the gap on the daily chart open. A credible candidate for the low of the day if we get a good buy signal bar 19. And the bears are concerned that we triggered a 60-minute sell by going below 12, but we have a tail on the bottom of 18, and so far a bull bar 19. The market often tries to reverse around bar 18, and that's where we are. We're at bar 19. What happens if 19 ends up as a bear bar, especially a big bear bar closing near its low? Then it'll increase the chances that it'll be a measuring gap, and we're going down to yesterday's close. What happens if it's a bull bar but a big tail? Bears will get out above a bull bar closing above its midpoint, but bulls are only going to buy if 19 closes at the moving average and near the high of the bar. Can you sell at the market? Sure. We just triggered a 60-minute sell, and you can get out above if it closes above its midpoint. A bad low one. So we broke to a new low, and we have a pullback, but it's a bull bar, and 18 has a big tail below, and the bulls are trying to keep the gap above yesterday's high open. So I think most bears are not going to short on a stop below 19. The bulls are hoping 19 represents a failed breakout below 12, the wedge, and below the 60-minute bar, but it's not a good enough bull bar to buy. So bears stop still above 16, and for the bulls, it's not good enough to buy. If it's a bad low one, will bulls buy the 19 low? I would not. I would wait for a better buy signal bar. Sometimes the market's in a trend and it's hard to enter. This is an example. Can you buy the 18 low, hoping for a wedge, 12, 18? I would not. I think we're still in the bear trend, and we keep testing support and going down to the next support. Can you sell the 18 low? I would not. Possible wedge. And I did not sell below 19. I'm currently flat. The longer a bear trend lasts, if you get a reversal, the more likely it'll be minor and you'll end up in a trading range. So if we do get a reversal, we'll probably be in a trading range, maybe the top of the range around 10. We closed the gap above yesterday's high. The bears are hoping that it continues in a small pullback bear trend down to the measured move. Unlikely we'll go outside down because yesterday's low is so far below. Remember yesterday we had a lot of expanding triangles. That means we keep getting new lows and new highs. So new low, new high, new low, new high, new low, and now new high. This is probably not going to be a new low. We're probably not going down here. Here's a 50% pullback, a little bit below where we are. Now we have a dip below yesterday's high. Bulls are again hoping for a wedge. And they'll buy if 21 is a pretty good bull bar, a bull bar closing near its high. And the bears, they'll get out above a bull bar closing near its high. And for the bears, it's a small pullback bear trend, but I think really difficult to short. We have a lot of trading range trading. We're near a 50% pullback. We're near yesterday's high, the high of last week. So a lot of support things here. 6,000, maybe we'll get down to 6,000 again. That's been a key price now for 7 days. Here's the Globex chart. We're right in the middle of the Globex chart. Right now, we're probably not going to break out of the Globex range. If we keep going down, obviously, then the probability is we will break out of the Globex range. But right now, I think it's more likely we'll end up going sideways in here, from maybe 4,600 to 4,620, somewhere in there. Wedge 12, 18, 21, but a bad buy signal bar. Bears, do they get out above 21? A wedge, a test of yesterday's high? No, but I would get out the size of a scalp above 21. So I'd get out maybe 21 or 22 ticks above 21, or I'd get out above 16. And for the bulls, a wedge is not enough reason to buy. You're in a tight bear channel and you have a bad buy signal bar. So probably more sellers than buyers above 21 and at the moving average. Tough for the bears, right? We have a wedge at support. So do you get out above 21 or do you get out above a bull bar 22? It's probably better to get out above a bull bar or get out the size of a scalp above 21. And for the bulls, it's a possible low of the day, but I would not buy above 21. If 22 closes near its high and above 21, then I think it's a better buy. Bears will get out, bulls will buy. Bears are hoping we fail at the moving average and continue the small pullback bear trend. Bar 24 is the end of the second hour. The market often changes the appearance of a bar right before a bar closes. So the bears would like that second 60-minute bar to be a big bear bar closing near its low, and the bulls would like it to be a bull bar. If it's a bear bar, they want a big tail below. The hour opened with bar 13 right here. Here's the open of the hour. The bulls would like to get a bull body on the 60-minute bar, so they want bar 24 to close above that red line. And the bears, so that's a pretty good bar for the bulls. Bears, I'd get out of shorts above 22, and bulls, even though it's a tight bear channel, it's an okay buy. But if you buy, I would buy small and then buy more if it starts to accelerate up. If we start to get 2, 3, 4 bull bars, buy more. And for the bears, it's a low one in a bear trend, but a bull bar, just like 19. So probably buyers not too far below 22. Remember, the bears are trying to get a second consecutive strong bear bar, 60-minute chart. So they're trying to get bar 24 to close at the low of the day. If it's not a good sell below 22, can you buy the 22 low, buy the 21 low? You know, if you're an experienced trader, you can do that, use a wide stop and scale in, but most traders should not do that. They'll panic if we get a couple big bear bars. So they'll panic out of their longs at a time when they should be adding to their longs. And invariably, they'll be trading too big a position. That's one of the things that when you, if you're a beginner and you're scaling in, you think you're trading small. And then when it comes time to add a second position or a third position, you discover that you're not trading small, that you're trading much bigger than you thought. And you end up exiting at a place where you should be increasing your position. And you end up losing money on a trade that soon goes your way. I would get out of shorts. You can sell again below a bear bar closing near its low, maybe bar 23, or you can sell at a new low, one tick below 21. And for the bulls, if you do buy, I would trade small and look to add on higher. This is bar 23. The bulls want bar 24 to close above that red line, the open of the hour. They're trying to get a bull bar on the 60-minute chart. That would make the hour a bad entry bar for the bears who sold below the first hour. The bears, a small pullback bear trend, a low one, 23, a lower high double top, 19, but a decent bull bar, 22, at support. And I think there probably are more buyers than sellers below 23. But if 24 is a bear bar closing near its low, it's a pullback to the moving average in a bear trend. I think bulls should get out below 24 and bears will sell, assuming 24 does not become too big. I still think this is going to end up as a trading range. We have a lot of small bars. We have a couple gaps. Below one, we have the 10 test and the 16 test. And now we have a body gap. There's a gap between these bodies, the pullback bars, and the breakout point here. That increases, if the gap stays open, that increases the chances of this lasting all day. But I suspect that gap is going to close in the next few bars. 2 minutes remaining in the hour. Bulls will try to get as big a tail as possible on the 60-minute bar. So even if it has a bare body, they want a very conspicuous tail on the bottom, making it a bad entry bar for the bears who sold below the last hour's low. They're hoping it's a pullback and a resumption of the bull trend. So they're hoping this is a breakout, this is a pullback, and the bull trend continues up. The bears are hoping it's a failed breakout. Last hour was the sell signal. This is the entry bar. But they really need a pretty good entry bar if this is going to continue down. And so far, they do not have it. Currently on the buy above 22, which is just about where we are right now, stop below 21. But if this bar closes below its midpoint, especially if it closes near its low, bulls will get out. And for the bears, they need a strong sell signal bar. They need 24 to close near its low. So looking good for the bulls. Possible low of the day, possible low at least of the next hour or two. It closed exactly at the open, so perfect doji on the 60-minute chart. Good for the bulls. Bears giving up. They're concerned that the entry bar was bad and that a gap closed. We still have a body gap. 24 does not overlap 12 or 13, but it looks like the body gap will close here. So the bears had a gap here. They tried to get a body gap here, and they failed. They have a body gap here. We broke below 9, and we pulled back, but the bodies do not overlap. So this is bad for the bears. The more bull bars we get, the more bull bars closing near their highs we get, the more likely this will be the low for the next couple of hours and possibly the low of the day. Still on a bear channel, we still have a lower high after lower lows, but a good candidate for the low of the next couple of hours. The absence of consecutive big trend bars in either direction, big trend bars, either closing on their lows or closing near their highs, reduce the chances that we're going to get a big trend day. It increases the chances that we're going to get a lot of trading range trading. Remember I said 10 smaller bars after a breakout might be the start of a trading range. So the top of the range might be around there. Whenever you look at a chart and you see a reasonable reason to do something, buy or sell, in this case buy, and you get disappointed, you have to suspect that the market is trying to form a trading range. Disappointing follow through, bad buy and sell signal bars like 16 and 21. Confusion, things not clear, those are all signs of a market that's probably in a trading range. The bulls need more and bigger bull bars if this is going to last all day. More likely, we're in a trading range. The close of 25 is important. Is it going to overlap the close of 12? If it does, there's no longer a body gap. And that means on the line chart, there'll be no more gap. Right now, there's a potential gap between this low and this pullback. But if this pullback closes above that low, there's no longer a gap. You can see there's a gap here between that low and this high. I'll close above the 12 close, and therefore we no longer have a gap. There's no gap between this pullback and this breakout point, and that erases some of the bearishness, lowers the chances of this continuing down. Can you buy at the market here? If you do, I would trade small. I suspect we're going to pull back and maybe test the 21 high. It's a bad buy signal bar. And when you have bad buy signal bars, the market usually goes down and tests the high of the bar. So that does not mean 26 is going to get down to the 21 high, but it means at some point in the next 3 or 4 bars, we'll probably dip below the 21 high. It's a bad buy signal bar, so some bears sold the 21 high, thinking that the reversal up would be minor, and then they sell more the size of a scalp above. The past several weeks, more of the scalps have been 2 or 3 points, and fewer have been 5 points. But I still think in terms of 5 points. So bears would sell the 21 high and place a limit order to sell 5 points higher and 10 points higher. And 80% chance they will not lose money, and 60% chance they'll make money. 60% chance will dip below that 21 high. They can get off break even on their first buy, on their first sell, and with a profit on their higher sells. What happens if we get a big bull bar closing on its high? Then I think instead of 60% chance of the bears making money, it becomes maybe a 30% chance. So the bulls need to convert this from trading range type of trading into clearly bullish trading, and they have not done that yet. For the bears, a lower high in a bear channel, but 4 bull bars, and they're all closing above the midpoints. And we have a wedge bottom at yesterday's high support and at last week's high. You can see the 21 low is, well, I can't tell if it's exact, but it's very close to last week's high. Last week's high is, I can't really see it on there. Bulls, I'd get out the size of a scalp below any bar, but that's basically the same as getting out below 21. So I would get out below 21. And for the bears, even though it's a bear channel, after 4 bull bars and a wedge bottom at support, I would want at least a micro double top to sell. So I would not sell below 26. There probably are more buyers than sellers below 25 and at the 21 high. 60-minute chart. We have a trading range and a bull trend, and we broke out of it, and the bulls see the first hour as a pullback and the second hour as a high one buy. But it's a big bear bar closing near its low for the pullback, and the buy signal bar is a doji. So probably not a lot of buyers above the high of this second hour. That increases the chances that we're going to be mostly sideways today, like this. High one, but so far a weak rally. So anybody buying above 26 needs to stop below 21. And for the bears, can they sell the 26 high, betting that this is a leg in a trading range and that will turn down soon? Well, I would not. We have a reasonable candidate for the low of the day. By the close of bar 7, there's a 50% chance we've seen the high or low of the day. By the close of bar 12, 70% chance we've seen the high or low of the day. By the close of bar 18, 80% chance we've seen the high or low of the day. And bar 21, probably 82 or 83% chance we've seen the high or low of the day. And right now, it's more likely that we've seen the high of the day than the low of the day. Either the high or low, by what I just said, 80% chance by the close of bar 18, we've seen the high or low of the day. That tells you that either the high or low of the day usually forms early in the day. At the moment, it's more likely that we've seen the high, but we may have seen both. Bears are hoping that the bear channel is continuing, that every rally fails and we keep getting new lows. They're hoping we're doing that. Many different variations of a bear channel. But I think we've had too many consecutive bull bars, and the context is good for the bulls. So I think that if this is going to go lower, I think it's probably not going to go much lower. Remember, I said we should test the 21 high. Maybe we'll do it here, 27. You have limit order bears who sold the 21 high, betting it's a bad buy signal bar in a tight bear channel. So they sell it, and they sell more 5 points higher, betting that will come at least one tick below the 21 high. They can get out break even on their first sell right here, and with 5 points on their second sell right there. What do the bears need to see to conclude that the bear trend is continuing? They need a strong break below 21, close below 21. But given that limit order bulls made money buying the 9 low and buying more lower, buying the 12 low and buying the size of a scalp lower, chances are bulls are going to buy the 21 low. So they're probably buyers below 21. And what about the Globex low? Can we get down to the Globex low? Well, as I said, I think there's only a 50-50 chance today that we're going to break out of the Globex range. I think we're probably going to settle between the two Globex trading ranges and trade in this area today. Limit order bulls bought at the 21 high, and the bears bought back their shorts at the 21 high. That's why we're turning up here. We dipped right below the 21 high, which I said was likely. The bulls are hoping that there'll be enough buying to create a good buy signal bar at 28. And the bears are hoping that there will not be enough buying and that the bulls who bought here will be disappointed by how quickly we're bouncing and they'll sell out of their longs. So the bears are hoping for a sustained sellout. If you're trading always in, a couple ways to handle this. For the bears, I personally would not short. We have 5 bull bars. We have a wedge bottom at support. So I would not short below 27. And for the bulls, they could buy the 21 high, stop below 21, or they could buy more below 21, arguing that the bulls have bought the 9 low and the 12 low made money, and therefore there probably will be buyers at the 21 low and 5 points lower. Bulls, if long, I would not get out below 27. I'd get out below 21 or buy more below 21. And for the bears, I think it's difficult. We have a wedge bottom at support with a good bull bar 22. Chances are we're going to get at least a second leg sideways or up. So I would not sell the first reversal down after 5 bull bars. The bulls are hoping for a higher low and then a new high above 25. But they really need to create a good buy signal bar. They need 28 to be a bull bar closing at or above the moving average. Otherwise, bulls are not going to buy above 28. The bears, they have a close below the moving average and a big bear bar 27. And if they can get a second bear bar closing near its low, even if it doesn't close below 21, you will get sell to close bears. If you have consecutive big bear bars closing below the moving average and the body of the second bar is completely below the moving average, that is a credible short, even if we did not yet fall below 21. So the bears are trying to get 28 to close near its low. I still think this is all going to end up as a trading range, even if we go lower. Next stop for the bears is yesterday's close in the 60-minute moving average. What happens if we have a 4 or 5 tick tail on the bottom of 28? Does it still sell the close? Nope. The bears need it to close on the low of the bar or within a tick or two of the low of the bar. Let's say it does close close to the low of the bar. Do you sell the market? I would not. Okay, that's not good enough. So I would not sell below 28. I would not sell the close of 28. And because it's not a good sell, there might be more traders buying the market than selling the market. We're also in a buy zone, the 21 high. We're testing yesterday's high again. For stop order bulls, the bulls need a good buy signal bar, 29. They need the current bar to be a bull bar closing near its high and closing around the moving average. Do you get out of longs below 28? I still would have to stop below 21, or I'd buy more at the 21 low and 5 and 10 points lower. And most traders cannot do that. So most traders should get out below 21. And then if you get a bull bar on the next bar, you can buy again. And for the bears, it's just not good enough. A bad sell signal bar 26, consecutive bear bars 28, but a conspicuous tail. So, and I don't want to sell on a stop below 21 because the last 2 times we made new lows, bulls bought and made money. So chances are there are more buyers than sellers below 21. So I don't want to short below 21. $50-50 chance that this is the start of a sideways to up move lasting a couple hours. 50-50 chance we'll go below 21. And if we do go below 21, there probably will be buyers not too far below. The bears are hoping 27, 28 is a resumption of the bear trend. They could not get 28 to close near its low. They'll try to get 29 to close near its low, or a low one sell signal bar. They're thinking that the bear trend resumed 27, 28, and they want a good sell signal bar 29. So they need a bear bar, and they need a bear bar closing near its low. If they get it, bulls will get out below 29. Okay, that's just not quite good enough. So bulls stop still below 21. And for the bears, I'm not willing to take that short. Now, I said that we're probably going to soon begin a pullback for a month or two. And the bears are hoping that today is going to be the start of the pullback. Here's the daily chart. The bull channel is really, really tight, so it's unlikely that we'll go straight down. However, it's possible that this will be the start of a pullback that will last a couple months and get us down here. So if it's not going to go straight down, but it's going to go down here, it probably will go sideways in this general area for 5 or 10 bars before it starts to go down. This is the E-mini. We have a new high in the rally. This is the NASDAQ, and we do not have a new high in the rally. So we got a divergence. Big tech is not keeping up with the overall market, and big tech has been the leader since October. So there's a small change taking place. More buyers than sellers below 27, below 29. We're testing yesterday's high again. Bulls would like to get a bull bar closing near its high, hoping that this is a higher low major trend reversal. So bear trend, pretty good minor reversal up. They're hoping a second reversal up will be major. We're testing the bad buy signal bar high, 21, and we're testing yesterday's high repeatedly, here, here, and then twice more here. But the bulls would like to get a good buy signal bar here, 30. If 30 closes near its high, it's a credible swing buy, looking for the market to go up, maybe just sideways, but up, maybe to this area. Remember I said I thought these small bars might be the start of a trading range. So even though the sell-off continued, if it's the start of a trading range, the bulls will try to get back there at some point today. Important bar. Can the bulls get a good buy signal bar? If they can, the traders will buy, taking a chance that we'll go up for a couple hours. A couple hours from or 21 takes us to around the middle of the day. And if it's not a particularly good buy signal bar, traders will wait. And for the bears, we went below 28, but traders bought it. They didn't sell it. Bulls are trying to prevent the day from going below 21. They're hoping 21 is the low. But so far, they're really not doing enough. They need to do more. Where did the bears short? Well, some sold below 27. I did not, and I would not sell below 21. So, since 10, we've had just about as many bull bars as bear bars, and we're in a support zone. It's possible that we go down 50% from that low to today's high. So that would be a 50%
retracement of this rally and this gap up. But I think right now it's difficult to get short. Bad sell signal bars, 5, 10, 16, 26. When you get bad buy and sell signal bars, the market is fairly neutral, and you usually end up in a trading range. And when things are disappointing, like disappointing buy and sell signal bars, it increases the chances that we're in a trading range. Bulls trying to get a bull bar here on 30, but they really needed to close near its high. The more it closes near its high, the more bulls will buy above it, taking a chance that it's the start of a swing up. And you wait to see if we get 2 or 3 bull bars and then buy. Yeah, but it's a credible candidate for the low of the day right now, or the low of the next couple of hours, 21. And bulls are trying to get a second leg up. Okay, I'm going to step aside, and Rose is going to take over. Hope everybody has a good day.
Hello, everybody. This is Rose. Today is July 27th, and it is noon. All right, let's begin. I'm going to take a quick lunch break soon, but I want to go through this quickly, is where we are. So let's take a look at the Globex chart. Okay. Market is coming down. Here is maybe leg 1, pullback leg 2, pullback leg 3, or complex leg 1, pullback leg 2. And there is a good support here. I don't know if market wants to keep coming down. We may not. We are actually very close to the Asia high. Even if we do come down, probably buyers waiting here. So, but if bears want to keep pushing this area is still going to hold most likely. Look at this right here. It's a breakout test, and there's a slight gap here. Bulls want to keep that gap open, perhaps turn this day into trading range. You got a strong bullish move up on the 15-minute chart. So this right here is a deep pullback. Market wants to most likely go back in sideways, which creates a trading range. We might sell at the end of the day. I don't know. I have a version of this chart going sideways and then selling end of the day, or we're going to close within the trading range. So strong move up. There is a very strong balance zone here. Balance zones are trading ranges that are magnets. Market was agreed the price was fair, so market likes to go in there or at least test the high or the low. So if it's coming from down below, it likes to test the low and the midpoint. If it's coming from down up above, it likes to test the high or the midpoint. So as you can see, we do have a wedge there, but I don't know how strong it is. It could be the 1, pull back, 2, pull back. We might get another leg. I don't know. There's possible double top here, but bears are not doing what they're supposed to do. So it looks like bulls are trying to get another leg up. We might get a double top with this high, or we're going to go 1, 2, 3 wedge, make a bear flag, and then come down. But when you have strong bullish move like this, market always likes to go back and test the high. Even if we do this wedge, okay, bear flag, we could trap the sellers, which is generally what you want to see, and then buy, okay, go into this gap area. This is where the sellers are waiting. That could bring us back down. We can then go back again, but then come back and maybe, close the day around the EMA. But this is again a 15-minute chart. So be careful selling. That's what I'm trying to say. And you guys heard Al Brooks pointing out that this day could end up in also trading range. So we've tested the July 19 high. So last week's high. This gap is still open. So the bulls know that they can swing here because you got 1, 2, 3. So bar 1, bar 12, and bar 21, and a higher low. They're trying to get some kind of reversal up. Double bottom, higher low, neckline. Bulls want to test the neckline, bar 25 high. They want to get back up to here. This is the last leg, right? So here's what I do is before I look for a second entry long. If there is a wedge, okay, I mark the last bear bar, but unfortunately we have a doji. So what I'm going to do is I'm going to mark the entire thing. And what I'm going to look for, bulls actually closing above that very last bear bar, not the doji. Doji is basically not all that clear. So I will base the bullish pressure upon using this bar 20. Okay, so we went up, and then I'm going to measure that mid-range of this. I'm going to find the 50% of this range, which is right here, and I'm going to wait for market to come down there. Then I'm going to look for a failure, and I'm going to look to buy. So here's your second entry long, bar 30. So when you have a strong leg down like this, the first pullback, even though it's strong, always expect it as a minor pullback. And then you find your deepest pullback area where you can look for failures to see you can be a buyer again. Okay, so second entry long, bar 30. I actually bought that and scalped, and looking for bulls to get up to this high and see if we can actually move the market higher. Okay, so this area is going to be target right there. Okay. Now, give me a second here. So take a look at here. Uses as that gap up that we have, bullish gap up. Okay, came under the EMA. We're going above the EMA. We took that neckline. Then we go sideways for the longest time in this tight trading range. And then towards the end of the day, we get sell to close. Could be 3 o'clock. Since it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, just about 3:15 p.m. Eastern Time, they started to sell. Now, I'm not sure if this is going to happen, but there's another version. But that's one way. Can market go higher to these levels, the 50%? Yes. This was also FOMC. So think of this as the gap coming down with several legs, trapping the bears, and kind of a small pullback bull trend going and testing that high. Now, we have a rather large range here, so I think the bulls want to test this high, and they're trying to come towards to the 50%. So if you just measure from here to there, 50% is approximately there. But then comes down to the EMA, you got a wedge, kind of a wedge bull flag, tight, bear flag failing and becoming a bull flag. Is we test that high. The rest of the day is right there. So they actually try to get back to the high. They did, but it's a trading range. So, and we ended up closing near the EMA. Okay. Beautiful reversal up as expected, test of the 25 high and possible wedge here test of this trend line. But it is resistance here. Bar 16 is the range of your resistance. Okay, market is trying to get in there. I'm going to take that doji as well because it is not so clear. So here we go. There's no sell signal bar here, so you can keep buying, but be aware is somewhere in here is bulls are gonna start taking profit unless we break above. Is perhaps somewhere here. Is resistance can be this. You know, I'm gonna make it smaller. I think this is where it's trying to go. We could end up getting some profit taken there, but beautiful bar so far. Bar 16, one tick body is the target, I believe. This is also 10 point for bulls, so they will start to take profit as early as here because we are also testing the neckline. But eventually bulls want to break out and go test the 2350 to 2725. 46, 2350 to 2725 area. No sell signal bar, so it's still trying to go higher, but I paid myself here just in case. Profit taken does not mean selling, and you can see that this bar is not the best sell. So if you're trying to sell underneath that, is you can put a sell stop order there, but you're gonna have to trail it up because if this bar actually takes out the 33 high, you're gonna have to cancel it because it could go higher. Like I said, I think bulls are trying to test the now 16 body or the open of 17. So there's nothing to sell. You should stay in your long until it gives in. So bulls trying to close above 2025, 2050, 2075, 46, 2075 area. So they can continue to go higher. Test the 2225, maybe even. But we will find stronger profit taken somewhere here and possibly coming back down to the EMA. I didn't leave a runner here because of this two-legged move. Okay, kind of strong. And then this right here. So we know as early as here, there's sellers there, but I wanted to see market get up there. So I took profit. If I see another bull bar after this, I might buy again, but I still have to take profit there. Because this is pretty strong, probably buyers here, buyers there. Even if we pull back, there are buyers here. But the problem here is 1, 2, 3 possible wedge, bear flag, and also right here. So I didn't want to stay in my long. See if this is a strong resistance, could bring market down. But even if it does, still, this is a trading range. The 50% of this leg, buyers are there. But what if we come down? Then is this a bear flag? Could be, I don't know. I would look for a pullback and then look to sell that. But so I just I just exited out of my long. I'm flat right now, but I'm willing to buy again. And you can see if this bar does not close bearish, buyers underneath there might be buying. So next bar could be an inside bar. Then you have IOI, is possible breakout to upside since there is more room, but I don't know. So I'd rather to take my money, sit there and wait to see what the market is going to do. I can always get back into trades and go long again. It's a trading range, so I consider this as a trading range highs. Bulls need to take out the prior bar's high to go higher, and bears want to take out the 34 low and come back down to the 50% of this leg at the minimum. So it's not clear. It's better to pay yourself at the 10 point. You can hold it, but where would you put your stop? Your stop is down here, right? Maybe even a wider stop if you're looking for open of the day tested. But how do you know that's going to happen? You have this trading range here. So anyone was stuck here, both down here, market went up there, that's great. Anyone who's stuck here, they will sell up here and market could come down here. So that would take away my profit. So, you know. Okay, I can take a look at that, Lawrence. So what Lawrence is doing with on Discord, the chart that he posted, show you. So he's asking whether or not this is actually a target. So he's counting the Brooks wedge legs, okay? So 1 pullback, 2 pullback, and 3, right? So let's do that. And here's what I would do. Connect that. So this becomes the target, but before then your actual target is actually right there. So we might actually test 2350 or 25. So this would be inaccurate. Or you can say that. I mean, if you're taking this whole leg as one complex leg, let me do that. First pullback, second pullback, and a very shallow third leg is, yeah, you can also use that, but then you're just about to reach that target. The first target was reached. Yeah, this would be conservative. But getting a shallow leg, if you're counting this as a leg, not taking out that leg low, bulls are signaling you that they're in a hurry to reverse this market. So they're going to tag that. So I would say yes, but I don't know how you got yours. This is still wrong. So, oh yeah, I see what you're doing. I would take the wicks. That's why how you got so quickly there. I mean, you are like way conservative than I am. Well, hats off to you on that one. I never thought that anyone could be any more conservative than myself, but you just beat me to curb. I take the wicks. So target and next target and the next target. Okay. So the bulls immediately bought and they are now pushing towards those targets. Okay. So bulls, let's do the math. That's 950. That's 10, right? So, but Let me get rid of this for a minute. That's not. So you count from here, and your 10 would be here. Bulls are trying to close. They're trying to test this 1175, and they're trying to close a bull bar above it. If they do, then we go higher to the next level. If they fail, we can come down because this is the second leg. We're just about to test this trend line, and we could go test and then not able to close a bull bar, and then we fall below this 1175, then we could get 2 legs down. But if they do close a bull bar, you're going to look for market to get above that line. If they do get above that line, then they're going to keep pushing higher. But 1175 is always threshold. This is where I look to see bull bars closing. Then I look for continuation into the next zone. $22.25, $23.25, all targets, including $23.50. Might be sellers here. We just need to tag this. That's all we have to do. And the bulls might start to take profit. And I will look for a pullback once again. And see if I can buy that pullback. So 22.25 is the minimum, and then a little bit further up. Yes, I bought that close of 35, literally hit. I was timing right here, and then I hit buy. So I'm looking for push up to 22.25 to 23.25 and take profit again. Excellent. That's it. So this is where I pay myself. But you can go and tag the 23.25. I didn't take any trades on oil today. I was kind of tempted, but I was in the yes trade, so I can't be all over the place with a bunch of different trades. I don't like that kind of buy this and buy that, and some people do very well with that. I just like to focus on one chart, be done with that trade, and then look for the other one. So I kind of missed my opportunity to buy that swing. But on oil, you got a reversal, but first you want to see how much the bears move the market. Oh yes, yeah, so that is 100 tick, but they couldn't get to the 120. So you mark the 120, and now if they're not able to get here, are the bulls, bears taking profit, and are the bulls moving the market 40 ticks? So once I see 20, 24, and then 40 ticks, then I know market is going to go up to 54. They're actually closed above it. So the next one is 80, which is right there. They closed above 80, so they're probably going to go to 100 and 120. So here is the 100, because they know bears made one, but where's the 120? So they came to the 100, but then they started to take profit. So that's not good, because I want to see 120, but I also am aware that the bulls will take profit. Now, what's the profit taken? It could be 20 ticks. Average used to be 10, 8 to 10 ticks move, but that's now multiplied because of the volatility. And that's, again, look, when it goes to 40, but not able to go beyond 54, you're not in a swing that could reverse. So market came to 46, okay, but not able to get the 50, 56, 54. So where did they close the bar? Not even 40. See, look, when the bar two-leg get moved down, closes, fails to close beyond 40 ticks, then this is not a valid counter trend. Okay, so that means find your 120 tick swing and keep going. But if these bears were able to maybe close right around here, 54, 56 area, they could have taken profit and bounced and then could continue to come down, but they could not create a counter trend. So now you mark your 120 and that's what you do. But look here, I marked it for bears, swing target is 120, but the bulls were able to make a lot more than, like, where's that, 40 and 56, 54, 56, and have closed the bar. So you know they have created a counter trend that will probably going to double its range. Okay, so that's how I get around on the oil. So it keeps me, I mean, 100 ticks is $1,000, so with single contract. All right, so we reached the target. Bullseye is still trying to close above. They're getting a major trend reversal here. But this still is difficult because if they fail to close above this trend line, we could come down 2 legs to the EMA, or at least to the breakout point 36 open, 35 close. I do use the ATR for volatility on the 5-minute chart, or how many ticks I can go. It says, right, so average 8, you can double it, triple it if you're swinging, but really I'm not even looking at that at this point. I'm just, I trade it like a machine. I trade it like a robot. If it goes a certain amount, is it going to go a certain more amount? Where is it failing? I've done it so much so that it became second nature. I just don't look at anything else. I don't even care if there's a moving average or open of the day. I have yesterday from the swing. I know exactly what they're going to do, what's my minimum scalp is, but will it turn into a swing? That's what I want to know. Everybody wants to, you know, maximize their earnings, but so not being able to close a certain bar type at a certain tick level will tell me that whether or not it's a failure. Okay, so let's get to the, so I'm going to go through this real quickly. When market is in a trend, okay, your minimum swing is 10 points. Okay, so that's what you're looking for. And the next is 15 points. And the average is 20 points. But actual trend could take you to 40 points, double the average, okay, swing, which is 20 points. Now, if the market, now go back to what Al teaches, right? These tick failures. A market is, say, second entry long, right? Or not able to take this low. Or maybe let's measure from here. So market moved a certain amount. That's just about, well, it is literally 10 points. Well, market, what is the average? What is the average scalp on S&P? Let's dissect this together. Yes, it's 2 points, but it used to be 1. So it's 2 because its volatility says, okay, to even the ATR, look, 2 point, that's 250 right now. It's telling you market can go up and down 2.5 points. So I use that as half of that is my scalp. If half of that is adding up to be a 125, that would give me extra tick to cover my commissions to get a 1 solid point. If I'm able to take that, chances are machines are going to go for the full ATR. Okay, so I don't know what it was back then, but let's take a look. So it was right there, was 4.3, so that's 425. So market is telling you, you should be able to make a 2 points and an extra quarter, okay, up. So if you buy the close or here, or if you buy above from here, or if you buy the close of the spark, so you're going to buy from here. You're looking for a 225, right? So here's 225. It went 250, but you don't care about that. You're looking for a 225, right? To make a 2 points. Yeah. So it went there, right? But at that time, so now I'm going to look again, 450, 450. So market is telling you is this is going to scalp probably 4.5 points, 1 time the ATR. So that's 225, 425, 450, 475, right? Gives you a 4 points and an extra tick. But what is the next scalp Al talks about? What is that? What's tick count that he counts? 21 ticks. 20 ticks is 5 points. 20 divided 4 ticks, 5 points. It needs to go 5 point an extra tick, 525 to give you full 5 points. If you're counting from where you entered the market with a stop buy order above of some bar. Did the market give you that? Yes, 525. But in essence, machines are counting from the pivot level. So if you also count from the pivot level, market is actually reaching a 10-point swing. Machines who bought 1 tick above the Zzw.21, they're also counting, okay, and applying the 21 tick failure on top of where the swing began from that point, point here, which is the pivot. So pivot level measuring tells you market is going to the 9 and 10 point area. Earliest the profit taken can start at 9, which it did. Went up a little bit, reached to 10. Why is it trying to reach 10? Because anybody who bought above bar 21 is trying to go for a full 5 points. Okay? So everybody start to scalp there because it's a great place. Plus, you have a 2-legged move. 2-legged bear move is where it starts is an evidence zone. Most likely, sellers are waiting again. If your 10 point is reaching there, or whatever you bought, 5 point is reaching there, you're going to get a 21 tick failure. Happens to be 10 point zone. You better pay yourself. Okay? Because when the profit taking begins, if nobody is there to buy this close to go to the next 15 point, 20 point, suddenly you get a bar like this, everyone will sell the close or 1 tick under, wanting to get back to the lows. Plus, price action says when you have a strong bear channel, first pullback is minor, might need to reverse from somewhere, and that somewhere is your 10 point. So to test the lows of that channel again. Okay. Hopefully this helps you a lot. It's not easy to trade with the machines, but if you actually see what they're doing, which Al explains, the 5 tick failure. What is 5 tick failure? It's machines are scalping 1 point plus 1 tick. 4 plus 1 equals 5, right? So, and if they're not able to go beyond that, that means market is already screaming at you. We have no business going in that direction. All I can give you is a 1 point, take it or leave it, because we're going to continue down. That's that 5-tick failure. What's the next one? 9-tick failure. What is it? It's a 2-point plus extra tick. When you start to get 2 points in that direction, something's happening there profound that machines know they're pushing the boundaries into that counter trend because eventually they want to start that swing. So instead of scalping 1 point, they're able to scalp 2 points. Someone needs to pay attention to that because that 2 point can turn into a 4 and 5. Anytime price gives you 5 points in one direction and closes a bull bar beyond that, meaning 1 extra point to seal the deal, that means it's 6 point. That means possible counter trend is starting to the upside. If you get a bull bar closing, look for a pullback, failure to sell, and the bulls go again. You can buy that pullback and look for a 9 to 10 point tag. Market can go there and then start to come down again. But that gives you a great scalp. So hopefully that explains. And you apply the same. So if you want to go to the next one, 15 point, average 14, which is the center. So average 10, it's actually 11 points. It can push towards the 11 point. But if they start to take profit around 10, which is average, so the 10 and the 14 and the 20 are average. But zones can start as early as taking profit at 9, 13, and 19. So even 21 tick failure can start to fail around a lot earlier than that. May not be able to get to the 20, 21. So you have to watch. That's because you're probably hitting some kind of a resistance. All right, so the bull bar 38 closed above that line. Bulls need one more bar. If they fail, well, they just failed. So now, are they going to be able to use this area as a support, or are they going to sell underneath bar 39? Bar 39 is a very nice bar. There might be some sellers underneath, but you got a really strong leg 1, leg 2. I would say this is going to come down a little bit. Bears are trying to take out the 38 and 37 low. Probably going to come down, but I would wait. You can sell with a stop above and see if you can actually make 125. And then, well, it says 2. So if you divide 2, half is 1. It's not even giving you 125. So I'm not even sure anybody who sold underneath bar 39 is going to get a 1 point. Half of that is not even 125. You see, it should have been 250. So it's not very promising, and you see they're having a hard time selling. But anybody who sold underneath that 39, they're looking for market to come here. So if they don't get that, what are they going to do? They're probably going to sell above this bar to break even and exit out because bulls are not going to let go. So if the counter trend is not starting, not giving you at least 1 point, that tells you this trend has not yet ended, or nor it's going to end. It might keep going higher and higher. So if you sold here, okay, and disappointed, what are you going to do? You can sell the close, which they did, and immediately came to the midpoint, or they're going to sell somewhere around at the high if this keeps going up, and they're going to expect this before it goes higher. When you're wrong, you're wrong. You either exit out, okay, or you try to fix it quickly and get out. They might have sold the 50%. I generally sell the 50% wick area and expect a quick pullback and exit out. Look, anybody who sold that 50% of that upper wick, they still need market to actually come in here so they can exit out. Or they're going to sell the high, a couple of ticks above, but they're sure disappointed. Why aren't they getting 1 point? ATR already told you that there is no 1 point in there. Math is not adding up. Okay, so you're not going to get that. So they trapped you underneath a bull bar. But you should have already known this is strong, breaks out. There's probably a measured move there in somewhere. Market is trying to get to here. See, they're selling the high of that bar that they sold underneath. They're trying to exit out. There's a measured move here for this bull leg. The bulls are going to keep pushing because they knew they would sell. It's a good sell signal bar, but you're selling against this. Would you do that? No. See how it just collapsed so quickly because everybody's desperate to exit out. See, right there. One more tick and everybody gets out. That's it. Everybody got out. And in fact, it did it twice. Did you just see it? I'm literally scientifically trying to explain how they exit out. Twice it hit it. 1, 2. So everybody out. Done. Because now it can go, if it closes bullish, that's an outside up bar. Can it sell? At this point, your objective is to exit out because you're already scared. Now, if it closes bearish, then it's an outside down bar. Then you can sell again, but it didn't close bearish. So you got to make a decision. Do you want to stay in the market bearish, or do you want to fix what upset you here? So many other bulls now getting their chance is if bar now manages to close above here, it could still go higher. I think anybody who sold underneath is getting a chance here. Now, what if it closes bearish? Can it come down? It might, but at this point, you're flat. Right, so there's a gap here from here to 38. Buyers are waiting here. Would you sell the close of that bar? Some bears are finally making money, but they had to sell here. Maybe what they've done was, the reason why this is going down, they sold here, they had a break even, exit out. Others held their original entry, waited for market to get there so they can make money. But they also are aware from here to there is a bull gap. So there are buyers waiting. They're making money, but they might still hold if this bar takes out this low. When I see something like this and the market is bullish, I tend to break even and exit out. And then I say, okay, I should have held it. I didn't, but this is still bull gap and market can still find buyers. But this is now becoming a surprisingly big bar. If it closes like this, I would expect continuation, another leg down. If the bear surprise the bulls, okay, then expect another leg down. But I don't know. There's still a bull gap there. It's still a problem for bears. I have to wait for this bar to close in 2.5 minutes. So it is up to you to make a decision whether or not selling, scaling in above, getting a break even, holding your other original contract, that's fine. You can say with the flying colors, hey, I held on to it and I made money. And I exited when this bar actually ended up closing on its high above its midpoint, I'm out. Or you can say, this bar actually closed bearish, so now I'm adding another sell because I'm expecting a leg down to the EMA. Since this is kind of testing the 50% of this leg, it's possible that market could come down to the EMA. I did warn you about that pullback. No consecutive bull bars closing above this trend line makes it difficult for bulls, but I'm not going to linger. If bar 40 closes like that, I'm going to try to fix it. If market presents a sell opportunity, I'll take it, but this bar has to close really bearish. So there's plenty of time. They're trying to create a surprise bar, but that's a breakout bar follow through. Kind of did follow through, not all that good, but still this breakout test point, buyers are waiting, gap area buyers are waiting. The only time this is going to get even more bearish, if the bears can close this gap completely with a bear body, that means they're going to have to close the bear body somewhere here, then I would assume they're going to get another leg down into this congestion zone, and then the buyers are waiting here. So you make your decision there. Now what's happening here? Well, there's a counter move here. How much is that? You can measure to see if this move has any kind of life in it, or potentially it can turn into some kind of a 10-point swing. Can it? Well, what's the criteria? Well, we're looking for a 21 tick, right? So, or you can look from here, right? 225 is 9-tick failure. They just tested the 225. They're taking profit. Now, if they close a bear bar beyond that, they're probably going to go for a 425 average or 525 from here. Now, if I take the pivot level, I'm looking for a 6-point. Okay, so if market can close beyond this level, okay, not only they can reach this 525, 6, then I would look for a 10-point, but I don't know yet. It could be just a move to the EMA, could be 2 legs, and all they get is from the pivot 525, and then we could continue to go higher. That means this is in a counter trend. This is just profit taking, lasted a little longer, but market is still may continue to go higher. Okay, so this is hiding in the back. That's 525. If you sold from underneath there, market made 225, but no bear bar underneath that. So they need to close below that first, 225, a bear bar. Those who sold underneath here, or sold underneath there since it made a new high. 225 is right there. Where is the bear bar closing below? There's still plenty of time. Bears can still close it and keep moving further down. But if they fail, it's just a scalp, nothing more. Then this trend can resume to the upside. Here's a leg and measured move. Some machines selling the close of 41, but I didn't. They can still bring the market down. Here's the, if I take this as my trading range, maybe even here, that's the 50%. They can bring the market down. Let's see what that adds up to. It's not 9. It's not even minimum 9. But they can come in, tag, and then bounce. But I need to see a bear bar closing below this 225. If I want to see continuation in this direction for bears, they need to do better here. If they fail, we go higher. What's the next one? That would be 28.25 to 29.25 for bulls, 20-point swing. People might find this is crazy. Who's got the time to do this? Well, the chart that we trade is 5 minutes, so things are going to move fast. You know, most of the time, ES is notorious for going sideways, and you know, the moves are not always clean. So you have to pay attention what the ES is doing. That's its characteristics, right? So it's not all that crazy. It's just like everything else in life, just takes a little getting used to, right? Where are the bears? What the heck happened there? Strong move. Pull back. They can still sell and get a second leg, but I think that was the second leg. And if the bulls now take out that 40 high, we're going to go higher. But we might come down once again, because bar 40 high is higher. So basically, technically, this is the first leg. Pull back, we might get a second leg down. Everybody sold the close of 41. I didn't, because I knew there was a 1 or 2 point scalp there, and market did not show me continuation. Why would I even bother? Right, so I know they're going to go back and test the high. There will be other bears now disappointed. They see a 1, 2, 3, 4, 5 bar trading range, or 1, 2, 3, 4 bar trading range. They will try to sell here and bring the market down to break even. After they get out, we could continue to go higher, perhaps. So they're just trying to get that leg now. But all that is basically disappointment. These bears are selling because they did start to sell the close, and it just went up and closed bullish. So they know immediately, up, sell, sell, sell. When it gets up here, because it's a small trading range, exit out in the middle. Market is trying to reach 27.25, 28.25, and 29.25. We just need a bull bar, taking out the 40 high with a bull body. Can we get a double top here and a neckline and then sell? Yeah, if we fail again, getting above this trend line, we can make a double top and take out that body's low and then the 42 low. If we take it out with a nice bear bar, maybe after this bar and the next bar, then I would look for a bear flag and sell all the way maybe down to 50% of this leg, perhaps down here. But I don't have that set up. And these bulls trap the bears. These bulls trap the bears. So the next is I'm going to have average 20 point. So that happens to be the open of the day. What do you mean by that, Moose? What if zone conflicts with point counting? Which one has priority? You mean the take profit zones? Which zone? Sell zone that I found with this 2 legs down. So basically it's resistance. I just need a little bit more clarity on that one. Okay. Yeah. Point counting always takes priority, because that's just the approximate area. Okay. But the point counting is what you need. All right. So that's the second leg. But look what happened. That trend line is still holding. Now what? I did say here. Let me get rid of that for a minute. It's more important. So here's your second leg. Now, we have a double top neckline 42. Some bears will park their sell stop orders, okay? And then what they've done is, this is what they do. So think of this as your sell stop order. They parked it here, then they parked it underneath that bear bar, and they got filled. They want 2 point, now double. You see how it's selling now? That's what I meant. Second leg. Now they parked it underneath. Now they're selling. Now it's getting excitingly beautiful. Look at that. 4, 5, 525. Beautiful. Now, where's 10? That's 11. 10 is right there. So we already reached 10, 9 plus. 975, but we should get the 10 since it's very, look, we reached the 525 where they sold, okay, and they're taking profit. That's why it moved up, but we're already beyond the 6 point. It happened way too quick, but I'm trying to prove to you how good point counting is. Now it came into the zone. It's not average 10. I think it's 1 tick short. Yeah, came to 1550. No, it's 2 ticks. I'm sorry. Just needed to go 2 more ticks. But look what happened. Let me get rid of that. Sell stop orders immediately moved underneath because of the neckline and a much better bar to sell under. And immediately measured from there, they got a 525. That's it. Now they're getting their 10 points. Yikes. Now they're going to take profit. It's probably going to bounce a little bit. See how it all played out? Failed, but I did say it's probably going to, so this is no more. This is invalidated because this is a counter trend and they saw a trading range highs and this bull flag failed. And I did say that if we failed one more time, we could have a double top neckline, and then the next bar or the next bar can take out that 42 I said, and I'm repeating myself again, and we could get to the 10 point very quickly. Now, they're accelerating. They need to close below that. What is the next one? They're trying to come down to 14 average, 15 full swing scalp. So 14 average is there, but they can take, if there's a strong support here, they might start to take as early as 13. This one hasn't even tested the zone, so it should keep pushing. So between the 13 and 14, we should test, maybe even 15. So I would expect a little bit more continuation. There it is, there it is, there. See, they don't disappoint. But I always employ the price action principles, right? So you gotta recognize trend lines. What does L say? Is if you go to L's setups, how he trades, there's also a course that he explains what he looks for. Trend lines. The major and minor is pattern recognition, right? So I'm happy to demonstrate, and then he looks at the tick failures. Tick failures are exactly where the TP take profit zones are. Okay, so it's exactly the same thing. I'm just trying to make it a lot more easier and give you reverse engineering why those are important areas, why it fails. Nothing's failing there. One side is taking profit there. What's failing is the other side who was trying to go long, okay, failing and allowing this side, opposite side, to take profit there. That means this side moved the market so much so they will probably want more of that, okay? So this was 10 point and now 15 point. But I did say this leg needs a second leg, right? Whether it's a small or whatever. And we did not get above the 40. There's no body, bull body closing above, and you got the trend line. So you can think ahead and say, oh, we got a probability breaking above and getting to the 20 point. My job is to mark that and look for the sign, confirmation. Okay, what is the confirmation? Confirmation is the failure first after profit taking from the 15 point, 14 point, whatever, taking profit, failure to, okay, make 5 plus 1 tick scalp, or failure to close below this. They had a failure, it moved up, but I explained, okay, so people got stuck here and then they're buying again, or anybody who sold here, they're going to sell up here again. You know, a lot of things, moving parts. But bulls saw the failure, right? And that was a 9-tick failure, right? So you can measure that. Or 21-tick, they didn't get to 21-tick failure. Okay, so it was like a 9-tick failure. So it went up. But where is the confirmation bull bar? Closing above this bar, who went all the way to the 15 point, 14 point, but where is it? If they were to get it, then yes, 20 point was next, but they couldn't. So now it comes down. That's the second leg. It happened very quick though. Even though it was a demonstration, that was super quick. Trading range, rejecting. It's also flag, but remember what we talked about the flags, right? Market is still trying to come down here. It's also double top, maybe a flag. So the bears see, again, opportunity, but the problem here, selling, is this trading range low, and market is so very bullish. It's difficult. So if you were to sell underneath 43 with a sell stop order, seeing that failure at the high, bulls are not able to close, you quickly move your sell stop underneath 43 if you're lucky to do that, or just hit sell market, or just leave it underneath 42, because if market is going to come down, they're going to initiate your sell order underneath 42, and they're going to give you plenty. But I like to move it very fast. Okay, so can they still sell this? They might. They just have to show me momentum, which is to close the cover this entire lower wick of bar 44 with a bear body. If they can get that, then they're going to break the last support, which is around 46.10 to 46.8 area. They break that, and then we could get a measured move to the downside. But I need to see it. So I need bears to take out this lower wick with a bear body fillet. You have the neckline there. Once the bears take out the neckline, it's pretty much game over for bulls, and they will exit out, and they might convert, because then you get measured move or 2-to-1. 2-to-1, and with an extra tick to cover everybody's exit order at the lows. See? And immediately everybody starts to take profit. It goes and closes on its midpoint. Yeah, I would sell under 43. Why? It's a bear bar. It's already giving me a better price than 42. Good job, Stone. Have a great day. All right. So you have an outside bar and you have an inside bar. And now you have two inside bars, 44 outside, 45 and 46. You have a big range here. Sellers want to keep sell, and they have stops. They might actually move the stops here, but it's better if this bar actually takes out the 45 low. Bulls want to trap the bears somewhere on the lower 1/3 of this bar, maybe a little bit down below, and they want to go back and run those stops and go and test this high and reverse back up. Bears want to take, not only come down here and then sell, break out, and get a measured move to the downside. Big range. So let's see. So bears are selling with a stop probably above 45, but better if they can actually close. You see what's going on there? They're selling. So they're trying to reach the 44 low. I'm going to measure that range, see where the targets these machines will scalp. Trap bulls are waiting here to trap somewhere here, but if that body closes below 21%, it's going to come down to the minus 1140. It might bounce here a little bit, but it could sell again. Beautiful. See, it's coming down. But there are buyers here. They want to trap these sellers. It's just too strong. So that's your target. They're going to pay themselves there. If they close a bear body, they can continue down, but it always bounces there because there's always some machine gets paid there. And you saw how it bounced. Now, if they actually close the body here, they can come down here, or they're going to start taking profit, and it's going to come to the breakout point, 44 low, and then there will be sellers waiting to sell again. See, stop here. They sold, and I said, watch for momentum, and here's their momentum. So I did sell as well. I put a sell order underneath and just wanted to see if I'm going to get filled. I did, and I took profit at the low, left a runner in here, took profit, done. Now, if they close a bear bar, chances are it's going to come down even furthermore. There's also a measured move now, or gap. That already done. So I'm just thinking maybe here. Well, that one is done too. So that's another reason why they're taking profit. It's a measured move. So they're paying attention to these levels because they're bulls waiting to trap. I cannot assume this is going to keep selling. I have to pay myself. You can also do this. This is nonsense, Rose. I can't keep measuring, but at least do this, right? You're owe this to yourself to see how much market moved. So here's 14 point. They took profit, right? So, but they couldn't close bull bars to go higher. So what are they doing? Now mark the 1575 and see if they can actually breach below and close a bull bar. If they close a bull bar, they're going to go to 20. I'm sorry, bear bar. I meant bear bar, not bull bar. So this is what happens when I don't have lunch. Here's 20, say 16, who cares? But if they close a bear bar right there, they're going to keep coming down to 20. If they fail, then you're going to look for, say they failed, and suddenly we get a bull bar. Why would that happen? There might be a wedge there, leg 1, pull back, leg 2, pull back, leg 3, but they closed. They closed the bear bar, so they're going to continue now into the 20. There it is, 20. So if you sold, you can stay in your short, or if you now are convinced that nonsense Rose talks about actually is working. Let me throw that out on the chart and see where did they reach. She did say this pullback could sell. Where are they in the big scheme of things? Getting to the next breakout target, aren't they? 46.03. Am I behind? No. Maybe I was a little bit because that selling was so fast. Although, but let me check. 0375. Where is that? 0350, 75. No, I'm good. And look, immediate test and bounces. Now, if they close below it after bouncing, they could reach here. This is their measured move target for this outside bar. Beautiful. Or just, let's see. All right, so you have this, even more. That's the measured move. But they're going to take profit here. Machines are not idiots. They know this is what they programmed to do, so they're going to do that. But if they can close the bar one tick below that line, then they're going to come to here. How do I know this? No one taught me this. I sat there. I poured my day and night, watched the charts, watched the S&P. I said, I'm going to trade S&P. If I'm going to trade S&Ps, I need to learn, and I need to see things clearly, what's being done on this chart. Then I can find my way around it, because there is a bunch of machines programmed to do something. If I can figure that out, I can trade around it. So I came up with this method. And I've been trading like this for years. Nothing changes. They seem to like doing this, so I just do the same thing, and I dance my way around these TP zones, tick failures or point failures, and then these profit-taking areas, and rack up a good P&L every day. I used to lose a lot. I mean, I'm not going to tell you how much I lost, but I have lost enough to learn my lesson. You sober up very quickly and like, no, there's something going on here that I'm not seeing. No one's going to teach me this unless I pay someone. So, or I can sit here, I'm a smart woman, I went to college, okay? So even if you don't go to college, everybody's got a brain, you just have to use it a little bit, right? It's all here. And Al is already giving you the keys with that course. He's already telling you what to look for. So now, if you want to really be 100% accurate, look at that. It just went one tick below to give everybody an amazing scalp there. Now it's bouncing. If you're smart enough to pay yourself there, okay, that's great. If your stop is up here, that's where it should be, and you're still looking for continuation down, you have to allow these machines to pay themselves, or their hedge fund owners. And then what's the next sign you're going to look for if you want continuation to down? You want that bar to come down and close down here. Then you're going to see continuation. Or the next bar starts selling and close down here with a bear body. But if it doesn't happen and they go back into this outside bar's range, now you're going to have to think, can I get another leg down? Or is there something here preventing for bears to sell again? Could be a wedge, leg 1, pullback, leg 2, pullback, leg 3. And machines know that there's a wedge, so they're trying to scare you by pushing the price up that much. Your stop is up here. You got a measured move here. That doesn't mean the market is going to meet that measured move. But if you have this level and you start to see whether this bar closes on its midpoint, next bar takes out that 46.03, then you know market is going to continue, and you can trail that stop above this or the next bar as we take out that low. And this way you can minimize the risk, and you let the market keep going down. I mean, I used to buy, I still do, value stocks. I started getting in since 2009 because the market crashed and things started to go really well. So the first stock that I bought, here is I'm dipping my toes into day trading or whatever, swing trading, right? It was AIG. I put in about $6,000, and then I turned that $6,000 into nothing. And my colleagues were laughing at me. It's like, this is you trading? Good luck. So I said, okay, this is not good. So I started to focus on, much bigger, large cap. And I said, what, I think I'm going to buy, and then I'm going to hold them for the longest time and forget about the swing. That's how I got in. And then I switched to day trading stocks. I liked it in the beginning. It was a rush. Oh, great, I can make a $500 today. But then you have to study. Okay, there's the earnings. There is the manipulation and all that. I didn't like any of that. And I was introduced to futures. Then I saw the futures as it's an ongoing story. Like you leave at 4 o'clock and you come back the next day, you have a price action that you follow that. I love that. That's great. Like I can have a relationship with one stock on one market, and I could just coming back to like I'm going to work every day, knowing where I left off, I can go from it. So that's how I became better since 2017. And I was introduced to Al Brooks, which I loved because he basically confirmed my point count. And I said, I want to learn more. And because this guy is literally, speaking my language. So what I found out in the market, he's already talking about it. And he's got a much more scientific way to look at things. So I took the course. I still go back to it. And now I have several different ways to trade, and I get to show you guys. So bears are trying to close below it so they can get continuation. Okay, so we've got really nice bar closed on its midpoint. We've got some kind of momentum coming down, but this bar needs to also take out that low. There are probably sell stop orders parked underneath 47. As these guys are selling, they're adding to their positions. Okay. If market doesn't want to sell and wants to reverse, this is the place to reverse, and those sell stop orders won't get activated. And stop is probably, since we took out that 46, they probably moved the stop above 47. But the moment is they take out the 47, they're going to move the stop above 48. Okay. Anyway, I'm going to grab some food and be right back to my desk, and I'll try not to chew while I'm talking, but expect breach of this and close below. If they fail, then you got to wonder, especially if this bar suddenly closes in 1 minute and 15 seconds bullish, there will be buyers wanting to buy one tick above that bull close. But if it takes out that low, keep selling. It's trying to reach here. I'll be right back. Okay, looks like the market is still trying to push towards the measured move of the outside bar. Should go down further. A little bit more room to the downside. Could come down to even 45.95 or 45.94.50. They could keep selling this, but let's see if we can just get here. Bars are getting smaller, and we start to get wicks around them. So that's the measured move target right there, 98.50. There's a measured, I mean, this isn't, yeah. A little bit more room for it to extend down. Joey Rod is like, my TP is coming up. It's my TP. I better take profit there. I love it. It's all about taking profits, okay? All about making money, seeing where the price is going. And if you don't want to take profit, that's fine. But move that trail, that stop, right? So, because it could keep extending down and extending down. So you don't have to exit out of the market, you know, the position early. That's what the stop is for. I talked about although this swing came in a little early, but we had a wedge there. Now this one extended a little bit, but there's also double top. Okay, so there's also head and shoulders in a way, left shoulder, head and right shoulder, and it's neckline broken right there. Okay, so find that's the extended measured move target on the 15 minutes. Bears might get their 40 point. Where's that? That's 30. So we're probably going to tag the 30 and bounce from 30, but if we keep selling, 40 is down here. Okay. Now, where was that example? Showed you guys. So I'm going to try to find out. Here's what may happen. If we can reverse, we could get this small pullback bull trend, because this swing came way too early. Where's that? Here. Or we could go sideways and up. but that's not what I'm trying to show you. That's not it. This is it. So this swing came a lot earlier, but eventually we go back up again. One hour EMA acting as support. On the hourly chart, we're also testing, but we might need to go below that a little bit more. Okay, so let's take a look at where we are. Is in the bigger scheme of things, we closed the gap, and it is now bar 48.50, so that's 1:30 p.m. I do look for a some kind of a swing at this hour. So bulls are trying to reverse this back. But we need a good outside up bar. So this bar has to close that body above 50 high. If they do that, there will be buyers wanting to buy the close of that bar. But it's 3 bars overlapping, so it's a small trading range. But there will be buyers wanting to buy that bar. We might actually pull all the way up to the bar 46. I'm going to take away, remove this measured move because we have met that. Bar 46 low is where they want to reach. There are sellers waiting. We might go further up and test the midpoint of 46. So sellers might be there as well. So let's see. Big bar, if you do buy, it's an outside. It's not the true outside up bar because it's low. It's not lower than the prior bar's low. But they will try to buy it anyway. But it is a trading range. So there will be also sellers waiting, looking for a double top with 49 high. So I can buy it, but I'm not gonna. So I'm gonna wait for a pullback. If the pullback doesn't come in and the buyers do show up, then I might buy and go want to test the 46 low. But it's because it's too strong and it's not a true outside up bar, I didn't buy the close. I'm going to wait for a second entry long, okay? But there's some short covering here, but it's not the second entry long, so better to wait. So here we go. We go test the 50% midpoint of this bar 51. Anybody who bought the close of that bar, disappointed. They will buy at the 50%. They will wait for market to come down here and buy again. As it goes up, they might break even because if we start to move underneath, market has a little bit more room to the downside because we do have now this measured move. Now, generally, if I really want, if I'm inclined to buy, I would put a buy stop order 1 tick above and wait to get filled. If market is not ready to go higher to the 46 low or the midpoint, they're not going to fill me. They're going to come in. They might give me a much better entry to go long, which is a limit order buy. And if they actually take out a strong bar like 51 lows, then you can cancel out your long because it's probably trying to reach somewhere further down. But it will reverse back up eventually. It's just not ready. So it's 45.93 seems like a good place, but what if we can't take out that low and suddenly we start to close above 46.01? I will buy, but I'm not ready to buy. So I'm just waiting because there's a little bit more room. Like I said, this could come down to 45.95 or 94.50 before even is reversing back up earlier, before I left for food. Disappointed bulls, both the open of that bar or at the lows, and had a break even. So if they might exit out, I did say that they would probably buy here if they bought the close. That's what I would do. I buy and immediately look for a pullback and exit out if that's my objective. Can it go higher? I can always leave a buy stop orders one tick above 51. If the limit order bulls are entering the market, they will show you by closing this bar as high as possible above its midpoint. Okay, then they will go and activate the stop orders. Then you have limit orders making money, stop orders making money. I would expect 1-to-1 target at the minimum to the upside. But that hasn't set up yet. Right now, it could be very well just pull up and break even and exit out, especially if the bears actually close a bar below 51. Okay, so they didn't close a bar below 51. If you have an outside-inside bar now, and you should measure the range of 51. Bulls want to test the 51 high and get a breakout above. You know what those targets are. Is bears have sell stop orders underneath 52, wanting to sell and take out the 51 low and get targets from there. So if the bulls actually close above the 50% of midpoint of 51, they're going to then close above 79. They could easily get up here. There are bears waiting to trap them, send it back down. But if the bulls cannot close above the midpoint, then they're going to exit out. Bears are going to wanting to close below the 21% and get a breakout from the 51 low and get these new targets. So when I see a setup like this, I step aside. I just wait for it to set up for me. I have no rush to be in this mess. They will show me the way. You have a false breakout from the low of 51. That is not a breakout, and that in fact happening because buyers waiting there to trap the bears. So when I'm playing this, I generally put a buy order, wait for a market to get there and bounce, and I immediately scalp and I leave a runner in case market wants to get up here. That's one way I trade it. I trade the traps, especially if they're fresh. So this was a very fresh zone, and it trapped the sellers. But if I do not see market getting above 50%, then I will exit out because we could finally get that bear breakout. But if we start to close above it, this is where I want to also scalp and then expect price to get here. Sellers are waiting to trap. They already trapped the buyers there, right there at the high. Okay, so we might actually breach this 100% and might reach 111. We might even reach here, the first target. But if I don't see a bull bar, I will scalp out. Because there's a chance that bears might be selling, limit bears might be selling here. Okay, because they sold underneath 52 trap. They're going to sell, okay, at the high of this bar or somewhere in the middle, and they get a break even with the low of that bar right here. So now you wait for that bull close. You get that, many bulls will buy that, hoping price to get to here and further up. And anything more than that is a breakout. See what happened there? Market is already showing these bears sold again. So I could have maybe scalped there instead, and I don't see a bull bar closing, just exit out. Because this is a potential of now breaking out. Another breakout, this time they tested the first target, but still no bear body closing below 51. So this is not a true breakout. And the bears are trapped for the second time. We get another bull bar, then I'm going to look for a second entry long this time, because two trap means bears will exit out because they're not able to break out. So that's what I'm watching right now. But anytime they close a bear bar, that's a breakout. I then look for this area to be broken, and then the next target, breakout target for bulls, and then the further down measured move. Sideways, but it is a leg down. They sold the first bull bar they saw, so limit sell. Anyone who was stuck here sold, got to their original probably target, but they're not able to print a bear bar. So there's plenty of time here, 1 minute and 15 seconds. Let's see if bears can actually get a breakout below the 51 low and meet this measured new target. In fact, maybe that measured move target is here, and we already met, and that's one of the reasons is why price is not able to go beyond and keep bouncing, because I measured from this breakout point. Okay. Or you could just keep the original one and see what happens. You're still short. But on the 5-minute chart, micro level, market is already showing you something here, that this is the second time bears are getting trapped. So what now? We could suddenly find ourselves here and here. Might even break out very fast to these levels. So failed bear breakout. So now there are buy stop orders above 54. But no closing, no bull bar closing above the midpoint. So that's still a problem for bulls wanting to go long. So it's better to put a buy stop order and wait. But it's a limit order market. Can the bears get their breakout now? I don't know. We'll see. So if this bar closes, yes. Too much time passed, but they can still reach this target. Those who sold here still looking for market to reach here. So this must be still a target for them, 93. But we will reverse. I'm just waiting to see when that's gonna start so I can time myself and jump in. It did, but it's limit order market and it's very weak. It's just not all that great. So if you want to buy, you can put the stop order above bars, trail it down. When market is ready to go up, it'll fill you. It's safer to enter with stop orders. That's why Al Brooks says if you are a new trader, use the stop orders, not the limit orders. So those stop orders might get activated above 54 now. And bulls will try to take out the 52 high because they know these bears got their stops there. So they want to run those stops and get to here, 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 to here, here, here. But you need the bull bar closing above that 50%, and then go in here. Closing a bull bar above this, that means it's becoming bullish. It didn't, but it also did not print a bear bar once again. So it touched the target again, not able to print one, but it's still not good for the bulls. It could still break out to the downside. Bears are not letting go just yet, but see, nothing closed. They're still trying to sell. There's target here. Globex low is magnet. Now you're getting the breakout. If they close a bear bar, they're going to keep going down. All right, so here's the measured move. We might make a double bottom, so be careful right there. And then reverse. Trying to get a measured move target. That's done. Globex low. It's magnet, but can we get a double bottom there? There's the 40-point target at 45.85 for bears. So not being able to get above the 50%, we could not go higher. So that right there, bears held it and kept selling. But buyers will show up soon. Bears own this right now. But how much is left towards down? Maybe another 10, 12 points, maybe. That's the measured move for bar 51. They might want to come down to here, get a 2-to-1 target, but they have to close a bar below this level. We're at the Globex low. Potential double bottom at the Globex low. Or we're going to keep coming down. But I think we need to bounce. So if you're holding, then your stop is here. Okay, maybe you can just tighten it and put it above the 56, because there's a little bit more room to the downside. Maybe 85, 75, 85, maybe 79 area even. But we didn't close a bear bar here. Underneath, still a strong bar, trying to get follow through, breakouts, follow through. It's trying to reach 80, 45, 83 area, 45, 83 area, or the 40.85 at the earliest, or it's going to keep selling into the 45.80, 45.79. Nice breakout for bears, sideways. So it's a bear flag double top, market double top, lower high trap, and this time they got a breakout. So this is the 2-to-1 target right there. .40 is right there, and I think bears got this. They don't have to stop there. They can go another 10 points, 5 points, 10 points below. Wow. All that started as a swing right there and kept coming down 40 points. We will snap back. At least I think maybe is 4,600 area, but it just needs to reach and find support. So 83, 82 area, we will eventually reverse back up. Just needs to reach the support. 40 points. And right, I think, I don't know if I'm doing this right, but I was one tick. Here we go. 40 point. They can go further down. They can come down a little bit more. But eventually we will snap back to, probably we're going to test the Globex low. If bulls are serious, we could go back up to 46.05 area. Or 40, I don't know, maybe that's too high. Maybe 45.99, 4600 maybe. I don't know, maybe that's too high. Maybe 45.99, 4600 maybe. But we are reaching a support. So I'm going to add another 5 points. See if they can go beyond that. That is 3 to 1. Open of the week is right there. I don't know if we're going to reach the open of the week. We might. We're so close to it. I don't know what caused this, but I talked about a swing. Bulls could not reverse it. So around 1:30 p.m., I look for a 6 bars minimum, 12 to 16 bar. So it's 1, 2, 3, 4, 5, 6, 7, or 1, 2, 3, 4, 5, 6 bars minimum. So that's one of the things that I look for. It could last another 6 to 12 bars down, but it's a 40 point here. So I think we're gonna, bulls are gonna try to get us up to 98.50 area if we can find support here or a little bit lower. But the goal, if this bears can start taking some profit here, covering, that hasn't started yet. Maybe with this inside bar, but it has to close bullish. If it takes out the prior bar's low, 57, then there's a little bit more room to downside. We have to wait for market to reach 80 or 79 area before we look to see more short covering. If a bar closes strongly bullish, some bears will start to exit above it. But if it doesn't, they can still sell. There's still room to the downside. So I wouldn't be hurried into buying here. But we will pull back to maybe 93, 93.50 area. Sellers probably waiting there. If bulls are lucky, we might actually reach 46.05 area. Now the open of the week is so very close. Let's see. 1, pull back, 2, pull back, 3. There is a parabolic wedge, so we might do a deep pullback with a couple of legs perhaps. The bulls really need to close this bar phenomenally so that bears can start to exit out. That would print another bull bar. Maybe the third bar would be a third, bullish close. Probably sellers underneath 56, waiting to sell and scalp, so we might need to pull there. 93.50 is also, but it's still very bearish. Okay, that is a really nice close. Things are just chart's lagging. I mean, it's not lagging, but the chart that I'm trying to trade on is lagging. The chart that I'm trying to trade on is lagging. Come on. Okay, now the whole thing just stopped. What is going on here? Give me it. Okay, here we go. Come back to normal. Trying to reach the 56 low. Possibly, it used to be 93.50, but maybe 92.50. There might be some sellers there, or we're gonna keep going higher, but let's just see. First 10 point, around 91.75 is these bulls, 91.25, maybe 91.75. Bulls are trying to tag, but they could accelerate up and snap back to 45.99 even. I think the 4600 is where we're going to go and test, but first the 10 point. We might come back down from there. So bulls need to close above this green line if they want to keep going higher, but sellers waiting up here. Some are already selling underneath 56. I did say there are probably sellers there because it's a breakout test area. Bulls didn't get their 10 points, so that's disappointing. Anybody who bought above 58, but you can see where we end up going and getting rejected, right? That 79%. We did not close above to become bullish. So anybody who bought above 58 disappointed. They will probably try to buy somewhere here and then look for a break even because this can continue to come down. We'll still want to get up to, just trying to measure, I think 91.75, but taking out that low 57 is not going to help. Yep, they just took it out. All right, so this is still coming down. Okay, this is where I expect maybe a either here or a little bit lower, some kind of trap. And here, there's nested wedge going on. Maybe the first leg pullback, second leg pullback, third leg. We will eventually get back to this trend line or up here somewhere, but it's just not ready yet. Still trying to get down to 73 area, 72, 73 area. But I think the bulls will start to show up soon. Here's the open of the week, low of yesterday, magnets. Market is in a support now. So it's looking for buyers, but that covering could excite some of the other bulls could join, and we could snap back to, so my target now for bulls is still the same, 91.75. So we should snap back there. This bar has to close above its midpoint if other bulls wanting to enter. Otherwise, it could just keep selling into, let me see, 75 or 74 perhaps. This is the next target. Seems to be, it's also open of the week. Bears seem to want. So bulls really need to close above 83.75. I'm no longer interested in 91.75. Is very difficult. I can't really buy anything here unless I see a bar that closes above 83 at the minimum is the better. If they actually start to close above 83.75, then the market could finally go back up to 95, but there's still room to downside. It's very difficult to buy anything here. So but at least if the bulls can actually close above 83, 82.75, 83, then they're going to push towards, let's see, 86.75 and 90.75. But still nothing. There's no bull bar. There's an inside bar, yet another one. And we could get another leg down before we even reverse back up. But leg 1 pullback, maybe leg 2 pullback, leg 3, we're still in the leg 3 here. And no buy signal bar. So you can't really just buy. Without closing above 83, no one is going to consider buying anything, especially if you take out this low again, bar 60 low. There could be more, there's sellers underneath 60 probably want low of yesterday to be tested. We may not buy before that happens. So now minimum for bulls are watching is a bull bar closing above 81, 45.81. If they see that, then they're going to determine, okay, maybe finally short covering will begin, and we can get back up to 85 and 89, possibly 95. Market is moving pretty fast here. We might need to test 71, 70 area before reversing, if we reverse. But we're going to get back up here somewhere, this area. There's nothing to buy, not yet. Bulls need some kind of a micro double bottom, close above 80.75 or 81. So if we start to close above 81, we're going to go test 86.75 to 89 area above. But still nothing. $73 is where they're trying to test. Could fall beyond that to 70 or maybe 69. Amazing bearish move here. Okay, we're at some kind of a support here now. I think we might finally see some buyers. But I'll believe it when I see a bull bar. Still nothing, but it's a really big bar. Could it be exhaustion? Well, this is still coming down. I did say we're probably going to test the low of 20 EMA on the 1 hour chart. We moved way below, but I think there will be some buyers finally coming in, or I wouldn't say buyers, but maybe short covering here, possibly. But so far, nothing. So they keep selling. We need an inside bar or a bar that closes above. Okay, so this bar didn't really close all that good, but that lower bit is kind of telling you that there might be some covering here. But again, you need bulls to get above 73.25. If they start to get above 73.25, we might get back up to 45.80. So we need bull bars closing above 73.25. Then the next target is going to be 77.50 or 76.50 at the minimum. Bulls then, if they get serious, 80.50 to 81.50, they're going to get very, very close to 45.80. If bulls can make it, they can keep pushing a little bit further up to maybe 85, 86 area. The low of, let's see, I believe 58 is where they want to get back. There's plenty of time in the day for market to get to the bar 58, so it's where they're trying to push towards. A good inside bull bar could excite more profit taken and other bulls to join, but we need to first get to the 77.50 and close above it. Breakout points, eventually market wants to snap back inside this area. That's why the 58 low is important. 77.50 is where bulls want to test, or 25 at the minimum. The moment we close above 77.25, we go test 81.25, possibly, or 80.25 at the minimum, or 80.25 at the minimum. Bar 58 is where they want to get back to, or at least to the 57 low. Really nice bar, so there are probably buyers above, or these bears are going to start getting out. But first thing these bears do, let's sell the first bull bar we see. But if they cannot sell and only scalp a couple of points, we're going to go higher. Like I said, 77.25 is their first target for bulls. Then if we start to close above 78.25, we go to 80.25, and 81.25 should be okay to test. $79 to $80. If you're using moving averages, market is trying to get to this resistance they need to break, but there is even more resistance to the upside. Look at the 15-minute chart. So this is now, get rid of that. So that's resistance there. This is where bulls need to break if they want to snap back to the Globex low. So we don't even have a bull bar on the 15-minute. So the 5-minute chart is struggling. But we should at least get to 81.25. So I expect market to test inside this red zone. In fact, it's more like this. I like to see bulls actually bring the market back up here, accelerate profit taking by bears. We haven't even touched the 77.25, so I don't know. We should get that. Just need to accelerate. Okay, here we go. It's a pullback, not reversal. Okay, so I'm not saying we're reversing here. It's a pullback. It's a counter trend. It's some kind of a profit taking. Okay, strong bull bar, they will buy above it, but you're buying. There's also one leg, two leg, and a third leg. So you know market is trying to go in here. Okay, so here, I'll get rid of this so you can see it clearly. Okay, two-legged move. We are doing a two-legged move, and it could be a deep one. Okay, overshoot. They're trying to break this. If the bulls can break this, okay, you can use that. Break that trend line, and then come back and retest. They can get a second leg up. They're trying to break that right now. What happens if we cannot break it? Then we would come back down to the 82 low. We might make a double bottom, but it's a pullback. Bulls need another leg up. So they're trying to get a second leg up. If we start to get a bull bar taking out the 64 high, they could get serious, but still this area, there's no bull bar here on the 15-minute chart. So they're trying to prevent that break above this trend line. For any kind of reversal, bulls, they need a double bottom, higher low. So some kind of a small bull flag at these lows starting. So if you actually, what is the last bear bar with this wedge? So mark the 50% and see if this wedge is going to reverse anytime soon. That's your 50%. If bulls actually start to show up and take out that 64 high, then that's it. We have a reversal begins, right? So it just always comes to that midpoint. Bulls got a 10 point here. If you actually measure from here to there, that's 10 point. They have, what do they do? That is 77. I said 77.25. That was one tick short of my target. So that was the counter attack. But nothing but a scalp at the 10 point with 64 high. Now, in order to go higher, they have to actually take out the bar 64 high. That would get them to the 15 point and the 20 point zone above. But it's very difficult. So we're now back, profit taking. But I don't know if anybody's selling here. We just cannot. If we close below that midpoint, we could easily come down here. So that's a problem for bulls wanting to bring the market up here. There's no close above this trend line. So we could end up coming down to the 62 low. That means this wedge is not complete yet. But I'm watching that midpoint line. This is where the limit order bulls can show up any time. And if we start to take out the 64 high, they will get serious about the pullback back up to 58 low. But they have to show up. They don't, then we keep selling. We have a gap to the EMA, and it is so 44, 62, 64. So 20 bar gap. Okay, the first test of the EMA could sell again. We would probably make a sideways, some kind of a trading range here, reach this area eventually, but there will be sellers. So if we keep selling, this EMA is going to move down. That's 20 plus bars to the EMA. First touch would sell. Market is struggling here. There's something going on here. Might be trying to decide whether they're going to sell, take out the 62 low and come down further, or this is where we reverse. That's why I have that midpoint. So I need to pay attention to that. There's a ledge here that it's been fresh for so long. I think that's where market is trying to get to. Very bearish with no signs of bulls showing up. All they did was bears cover. Some bears try to cover, but one single bar. All they got was a 10 point and scalp, nothing. They need to see some kind of a double bottom, something. Maybe that is a double bottom. That's additional 10 points after the 40 point. So market is still very bearish. No signs of bulls, but lower low, double bottom. I don't know if they're going to show up here. We need to close above this trend line with a bull body. Then the bulls can show up. Okay? That would be lower low. We can finally reverse back up. But it's not for sure yet. I think some bulls might be finally coming in because this is too low. It could be a good price to buy. Okay. They see a double bottom, lower low. But again, we need to close a bull bar or any kind of bar above 71.75 to get serious first about reversing back up to 76 and 80 and 86 area. Otherwise, it's just going to keep selling. Okay. We need to close above 45.71 to have an attempt to finally get bulls go higher. Strong bar, 66, still very bearish. But I think with 58, 63, we're going to finally start to see some bulls coming in shortly. Bulls need a close above 71. Their target would be 75 and 79 and 85. But without 71 taken out, 45.71, they could keep selling this into 45, 59 area, 58 area. No one wants to be the first to buy, but this trend line is everything. So we made a lower low here. If we start to close above this trend line, we could finally get back to open of the week. This area is where market wants to snap back to, which is where the EMA is. So, but the first, I always look for 5 to 6 point move up. So bulls need to prove to me that they can test the 71. But if you're selling, this is always in short. market is still very bearish. It's 3 o'clock. It could keep selling into 3:30 before actually reversing back to EMA. They need some kind of a reversal bar, an outside up bar, completely rejecting bar 66. Another, I don't know, maybe even a bar that closes like a kicker, they call it. So it's a really good strong bull bar, but an outside up bar. Many bears will exit above or the close of that bar. So, or any bar that closes near the 66 open. Can we get 3 inside bars? That would create momentum, but it has to be by the close. So that's not really by the close, is it? Bulls need to take this opportunity to get back up to 71. There's the ledge here, that's yellow line, 45.60. So looks like 45.60. We may need to go test maybe 1 tick under and before reversing back up. So right around here. There may not be too much space to downside left. If bulls start to show up here, they're going to have to close above 68.50, then get to the resistance, which is upper 1/3 of that brick bar, bear brick bar 66. There are probably sellers waiting there, but 72.50 is their 10-point scalp. But first, we need to get above 68.50. All right. Next, target for bulls is 72.50. They might get a 20-point swing here, but first 72.50 is their 10-point. The next one will be 15.7650, and the 20-point swing is 82.50. And it could be very fast, so be prepared there. Here comes 72.50. We just tested 72.25. It's always 1 tick failure, but we should get above it. We should accelerate into 75.50 to 76.50. It's like an auction I'm running here. Okay, so they're taking profit at the 72.50 here. We just tested it. So that was that 10-point. Can we get a pullback, deep pullback? This is an outside up bar 68. So it's good for the bulls. And the third bar we get close very strong. That's momentum. Bulls will buy the pullback and they're going to try. This is where they're trying to get in, get back to the EMA. But remember, this is 20 plus bars. So the EMA, first touch, will sell. Okay, so they're probably going to sell again. So what the bulls trying to do here is get a 20-point swing. So I think the 81.50 to 82.50 is where they're trying to get to. But we need a bull bar closing above 72.50, 73.50, and not do this. So 73.50, if we get, we'll start to accelerate and close bull bars. 76.50 will be next, but okay, so there's still 2 minutes and 15 seconds for bulls to actually accomplish that, if they can. The reason why we're doing this, because not only it's 10-point here, it's this bear brick bar 66. I said the upper third of that bar, sellers waiting. They're disappointed because they sold. That's a Marubozu, okay, without any wick above or below. They sold the close of it, and they're disappointed, so they're selling in the open or at the high of it. But bulls are trying to get above it. If they do close a bull bar around or above 73.50, 76.50 is going to be next. 82 to 81.50 could be next. And this can happen super fast. There you go. Market is trying to get a 20 point here. The first 15 point or 14 average, but then they can accelerate and get to the 20 point, which is right there. It's a little bit above, one tick above EMA. Okay, we just reached my 15 point target. There should be some profit taken, or we're just gonna buzz through this. Bulls want a 20 point average pullback and a swing, but resistance above, like I said, this is where they're trying to get in. So from the high of this bar, yeah, they're trying to get in this red zone on the Globex chart. So we just need to close another bull bar above 77.50, then that's going to accelerate bulls into 81.50 to 80.50. Go bulls. I mean, I found that support. I didn't have to, fuss with it as price was coming down. It's obvious that it wants to come down, but you got to count these legs and look for, okay, like stake in the ground bars like 63, 58 low is where market is trying to get to. And even we can push towards is 86.75. That's where the actual sellers are. But I'm more interested in the 20 point, or I know there's a lot going on here. Let me clean this up a little bit. That's the 20 point. Bears want to keep the gap open to EMA, but all right, so they're taking profit, like I said, at the 14, 15 point. But if this profit taking ends, we could just buy the close of that bear bar and look for a second leg up. So I'm looking for bulls to deliver and get us to at least to 81.50 or the EMA test. There's so much volatility, even though it's not Friday yet, but market is just strong. But I think this bar is going to want to get into here or get another leg up to here. Just about 5 points long, or a little bit more, maybe 5 3/4. If bulls can prevent a bear close here, then they can prevent bears from coming down and testing 67.25, which is a 10-point profit taking for bears. That's what they want. But if they can prevent this bar from getting bigger, is in about 1 minute and 10 seconds they can buy and go with a second leg up. So it's, let's see, 58 low is still the target. I think this is making so much damage to the bear case. We might go sideways and up. until the close, or we could come back down one more time, make a higher low. But if we cannot close a bear bar below 71.25, bulls are going to have a run for 81.50 at the minimum, or 82.50. And since it's, getting places so fast and so quick, we might actually test the 82.50. All right. Bulls kind of prevented that close, but so they're looking for a second leg up towards the 58 low. We might need inverse head and shoulders. Even if it's a small, it could still bring us up here. So this bar is big. The low of that bar, 69, is basically support. It's very difficult to reverse a strong bear, trend back up. So it's going to show some kind of profit taking, and it could go sideways, but eventually we're going to get to here, to the EMA. 10 bars and 2 legs. So far, 1, 2, 3, 4, maybe 5, 6, 7, 8, 9, 10, or 8 bars, the minimum. We could still get to the EMA. Bears want to keep the gap open so they could keep selling into here. But this bar now needs a second leg up at least, and then maybe we could get a double top with that upper wick of this bear bar inside somewhere here. So let's see if there are any buyers here. People bought above this bull bar on the 15-minute chart. So they're disappointed. They will probably going to buy again. This is still support here, is small support. But bears again did a lot of damage here. So they're trying to get a 10 point. 10 point is 67.25, and 9 is 68.25. They just got the 9 point, so they're still doing great. We could not get above the 15-point zone. Could be a minor pullback, come back and make a double bottom this time, maybe higher low. So if we can, right around there, okay, block these bears, then we can maybe get back up with a second leg. So that would become inverse head and shoulders. Yeah, the EMA test is, it's not so far away. EMA is now way below. So that's probably going to sell and might even sell more into the close. But it's too low. It'd be better if we can actually move to EMA and sell from there. Yeah, bears moved the market just about 10 points here, and they might want more. But it's still support here. They're breaking 62 low, but if they cannot break it with a bear body, it could still go up. So these bears might take profit here. Maybe we can bounce, I don't know. It's still very, very bearish, but even though it's always in short, bulls will want a second leg up, even though it's a deep pullback. So I am done with this. This is no more. So what am I looking for? For bulls is they need a second leg up. Okay, so that would be, it will get serious if the bulls can get above and close above 72.50. If they can close above 72.50, then we might actually start to push towards the high of this bar and continue. But it's a very strong bar. Bears probably want a little bit more to downside. Bulls want a higher low. They took out the 62 low, so I don't know if this is any reversal pattern here. They seems to be still pushing, but I'm looking for some kind of a slingshot here. So we could go up here if we can take that out. Okay, so first here, then here. So if you start to see bull bars, then expect price to get to here. But bulls need to surprise us here. Otherwise, it's going to keep coming down. Some profit taken still at that 10 point. They actually breached below. But very difficult. It's trying to make a trading range right now. So anything this bearish, it's very difficult to reverse. They got a 10, 15 point, 14 point, that's about it. They can still get to this level, but it's just sideways. Market is deciding whether to use this area as support and get to the EMA. EMA is around 79. Bear's done a terrific job here. They still want to come down to 45.60. 45.60 is the ledge. All right. Last half hour. So if any kind of profit taking begins, now is the time. Also on the 1 hour chart, I mean, we're at a level that we might need to go up a little bit. On the ETH, we're at a support. Bulls need to close above 70.75 to start going up to new 10-point zone, 74.75. Next strong sell zone is at the high of bar 58. I don't know if we're going to be able to reach there, but I think the market may want to test 58 low at the minimum. So if we can start to close bull bars here above 70.50, then the bulls will get serious yet again. Next target would be 74.75 for bulls, then 78.75, and a 20-point swing above the EMA, 84.75. I don't know if they're going to be able to make it, but they might. It's the last half hour. Okay, so 70.75, watch if we get a bull close. 74.75 is where they're going to tag and take profit if we get a close above 70.75. Some kind of a double bottom here and higher low, but it's just very bearish. The move up is going to be very sudden. Like suddenly you're going to be like seeing a bunch of bull bars. And that may not happen until the last 15 minutes, who knows. Either it's going to start now, or first we're going to test the 62 and then come down and test the 45, 59, 58 area first. then we're going to start to get some bull bars and reach the EMA. Start to get some bull bars and reach the EMA. I don't know how much space left other than this ledge here. This is the ledge. We might go one tick under and then go up. Bears coming down for the 15 point. Some kind of a micro double bottom with a neckline. I think buyers are parking their buy orders one tick above 73. They might lower it down, bottom with a neckline. I think buyers are parking their buy orders one tick above 73. They might lower it down. Bears reach their 14 plus point, looking for 15. 15 point swing is taking profit. Let's see if we can get a 6 point and 10 point here. 68.50 is where bulls are trying to test. 68.50. Or the neckline, 69.75. If this bar closes bullish, they're going to drop the buy stop orders one tick above that bar. And market could then, I don't know if we're going to be able to get to the EMA. Might be getting ready to go up. And the move could be very fast. But without closing a bull bar here, it's going to be very difficult. So coming down to the ledge. At this point, I would let go. There's nothing here that you can buy unless you see a strong reversal bar, an inside bull bar perhaps. Yes, exactly. Still pretty good selling. Can't go against it. There's still room to downside. 57 area, 45, 57. 20-point bears is 57.25. So we might test that before going back up. Wow. Let's see how far this can go. Yeah. And that's a support there. A little bit below the ledge that we've never tested. It's like a couple of days ago. We might even push all the way to the 52. Buyers are here. Bears kept the gap open, but we have to get back up to the EMA, and we will. We're actually going to get back up to here. But now that we have a new low, so it's 1, maybe 2, 3, I don't know. Here's the leg 1, leg 2, and leg 3. So at this point, I would let go. Let it go beyond 60. It is probably going to come down to, what is it? 57.25 or 58.25. Then it might actually reverse back up for the end of day profit taking. There's more room to downside. We're almost there at the ledge. This is still support. Okay, here's the ledge test. And we went one tick below. So that's done. But is this good enough? We haven't tested the 20 point yet. Bears want that at least 19, which is 58.25. So I think they're going to come down and test that. It's still very bearish. Can market go all the way up to EMA and further above? Yes. I think we might end up pulling back to 83 area, 45, 83, if buyers show up. I don't even know if there are any buyers here. There will be profit taking at the 20.19 to 20 point. That's where some buyers, end of day buyers, might show up. Okay, so we haven't really tested. Don't buy this bar. Let it come down to 58.25 at the minimum. Could test 57.25. We are way beyond the 20 point now. We're going to get a sudden move up very fast. I don't know when that's going to happen, but it's reaching this bull gap area that I marked. Amazing day for bears. You can't expect buyers to show up. Not after this. They took out the 68. They're obviously selling. You just sell the bars. Sell them, sell them, sell them, sell scalp, sell scalp. So I don't think we're going to ever make it here today, but probably tomorrow we will get to the bar 58. This is where I would finally look for some kind of reversal back up to the EMA. It's a good support. It's testing the bull gap that we found. But right up here or right around here, sellers waiting yet again. Buyers are looking for a door in. They're probably parked their buy stop order above this bar 75. They're trailing. They're looking to get in before it reverses back up. The earliest way to get in. So buy stop orders are being trailed above bars. And it starts to reverse back there. It can give them a 1.2 point, 6 point. Wow, that bull bar just got slapped down so fast. But this is when things get interesting. This is where I expect some buyers coming in. Okay, so buy stop orders above 76. Market will probably going to snap back up to 66.75 area, 75 area. $63.75 is 10 points. 67.75 is 14. Here we go. Here we go. Let's get them up. There's just about 6 minutes left for the bell. Market could go up to the EMA. It might even close above EMA. Or at the minimum 67.75. 20-point swing. Can we get out of this before 4 o'clock? Yeah, 73.75 would be next. 67.75 next, if the bulls can get us there, and or the EMA is or slightly above EMA, we might actually reach 72.75 to 73.75. We might accelerate. Who knows? I don't know. There's not much time left, but this is the end of day. Well, depending on where we open, this is really nice, strong move. We're probably going to try to recover from this a little bit, but we might try to sell in the morning first, and then it might go sideways and up tomorrow. But look at the daily bar. We're going to have an inside bar tomorrow that could go up a little bit, but it's a very strong bear bar. Might want to get continuation, or it's just a one big pullback. I think tomorrow we're going to try to recover a little bit. Here we go. So 66.75 to 67.75 is target for bulls. If they can close a bull bar here. They're trying to get to the EMA and close around it. Probably trying to reach here. It might drift a little bit further up. Here we go. Target is 67.75. We should test that. Bears want to double top here, prevent testing the EMA, but 2 bull bars. It's trying to get to the 69 low, if it's not there already. Nope, a little bit more room, and then 70 low. That will be the EMA test. 67.75, some profit taking will happen there because it is resistance after all. But if the bulls close a bull bar above 67.75, they're going to try to push. Okay, here goes the bell. There's not much time left. And I mean, I don't know who's buying here at this point. All right, I am done with my session, everybody. I am super tired. Afternoon sessions tire me. And I think this data fell behind. So I'm going to end the session, and I will see you guys next week. Tomorrow is Tim Stout and Brad Wolf. I'll be in the Discord, probably posting. But I think tomorrow we might continue to sell a little bit more, and then that maybe the first hour. Unless we open up high, I'm going to be looking for some kind of a resistance and sell from that resistance. But we might continue in this trading range until we get some kind of a maybe reversal back up with a, I don't know. I'm thinking we're still going up here, but tomorrow, if we actually start around support, then I'm going to look for pullback to these areas. But if we start gap up, then I'm going to look for resistance, and I'm going to sell from that resistance back down. So we'll see how that goes. Okay, bye everybody.